All right, gonna get started here. Everything looking good on my end. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. Before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so just to kind of get rolling, just want to talk about the title a little bit. Basically, buy the rumor, sell the news. Obviously, very clearly we had a run up leading up to the big event today, the Coinbase IPO, and then obviously sold off pretty heavily into the IPO. And obviously, anybody that bought into Coinbase from the IPO took a massive hit, at least temporarily for now, but we'll get there in a little bit. But before we do, let's go ahead and just run down our typical little order here. So we're going to start with the 10-year 10-year treasury. I'm just going to summarize this one, not going to go into all the detail. We are basically, exactly where we're supposed to be, exactly where we anticipated. We are just basically just sitting on that resistance line. This was our breakout top of the channel. We came down to it. And, we're right here basically below the 21 at the 821, attempting to avoid the cross back to the downside. I really don't consider this to be in danger until we start closing below 1.46%. But honestly, I don't anticipate that will happen. Even if we do get a slight sell-off, I think it would be a situation like this where we get basically like a fake out, breakout to the downside, and then continuation to the upside. And obviously, target is still going to be up here at the 2% roughly level. But we'll have to see how that plays out, obviously. But as far as I'm concerned now, nothing has changed. This is just our regular move that we've been calling and anticipating for quite some time now. Now let's flip over to the dollar next. And dollar is doing exactly what we discussed. After we came up here to the top of our ascending broadening wedge, we topped out at least temporarily. We were able to sustain price action for a little bit above the 200 exponential and 200 simple, at which point in time, we had spoken specifically about how we need to cool off these indicators, oscillators. So we had sold back off. Initially, we thought we would find some support at the heart line here in white, which we did. But once again, anticipated that without getting the cross back to the upside, that we were probably going to be coming back down to the bottom of the ascending broadening wedge. So again, I would expect us to find support exactly where we spoke about at that 90.9, let's say 91 level. So I would expect the dollar to come down here to that 91 level and find support. It is possible that we'll find support here on our little cluster of moving averages, but I think more likely than not, we will just come back down here and test this support, make sure that it holds, and then continue back to the upside, oscillating inside of this ascending broadening wedge. In the event that we do get a breakdown from it or a breakup from it, obviously we can address those targets. But that's not just going to happen overnight. But once again, nothing changing on this. Looks exactly how we expected it. And expect continuation along those lines. So let's just run through our indexes real quick, and then we'll jump into crypto, and then we can do our commodities and our tech sector as well. So S&P, up here at all-time highs. Unfortunately, we did get a bearish engulfing candle. So at this point in time, we are still inside the bullish control zone. I mean, there's no way we were not going to sell off right here. We're literally on the daily, we're literally up here at 98.41. This thing literally goes up to 100. So there's no one left to buy at these levels. We need to be careful now that we don't basically, like, as this thing was just continuing to float up, that essentially this doesn't just start to sell off heavily and then lose support in this area. But as long as we're above our breakout area, I would expect us to find support back here at like the $400 range, assuming that support holds. That to me is like a long-term buying opportunity, as it would be like essentially a confirmed breakout. Once again, though, just flipping over to the weekly, we need to pay close attention to what's happening here on the weekly, because once again, we have our high back here. We have a slightly lower high or same high right here. And then once again, we have a slightly lower high here going as well. And then you'll notice, obviously, that corresponds with our low high right here, our slightly higher high right here, and then once again a clearly higher high right here. So once again, we are looking at, you know, triple bearish divergence on the weekly. You know, doesn't look good for long-term sustainability. Now it's very possible that we do push up here, but you know, once again, we would have to on the weekly take out these levels. We have to go like over 98%, over 98 on the Stochs, you know, just to invalidate the bearish divergence. So once again, we basically have to go to 100 completely. You know, every single person that ever was going to potentially buy into this thing, we have to max out the oscillator completely in order to avoid weekly bearish divergence. So once again, need to be very careful at these extremely elevated levels, as you know, there's literally like we're running out of buyers for these indexes. So that's S&P. Dow Jones, you know, came up here once again, all-time highs, came back down, showed some strength. This isn't like super bearish or anything, but you know, it's essentially a shooting star. Need to be careful with a shooting star, as essentially what it is a push up to higher prices and then a rejection. Now this is more bearish when it's red, when it opens, you know, gets rejected and then closes lower, as we're here, we open lower, move up, got rejected, and then close higher. You know, but once again, you know, at extremely high levels on this thing, this is on the daily, we're up at 93, so it's not quite as dangerous, but we are showing some weakness. And then if we flip over to the weekly, you know, it did exactly what we were expecting or anticipating. You know, came up, basically put in, you know, a slightly higher high right here, and then now is trying to push back up to that same level again. You know, that's at the 97 level. So essentially to invalidate any kind of bearish divergence we have, depending what points we're looking at here, you know, this point to this point has basically been invalidated, so that's good. You know, but we could potentially be worried about like this level here, as if this pushes up, we'll have a much less significant level of bearish divergence, but still bearish divergence nonetheless. Now, of course, it's possible that we push up here, you know, to like 98 or whatever, you know, and then confirm this breakout, get some consolidation. But, you know, these things need to cool off. So even if we just go sideways for a couple weeks or a couple months, you know, that would be perfectly fine and would give us much more potential for like actual continuation. But like at this point in time, you know, these levels are unsustainable. But again, you don't want to get bearish on these things until they present themselves. Nasdaq, once again, did exactly what we spoke about. You know, got that powerful move up here. We showed, you know, clearly higher level of support right here. And then we said specifically we were expecting this to top out higher than the previous one. So we've entered into essentially like a micro, you know, uptrend after like this is basically just a relief rally off of our sell-off. Which, you know, if you're paying attention, obviously, we came up here to the 886, topped out. Once again, a bearish engulfing candle. You know, we completely embodied like the previous candle, closed lower. So, you know, to me, it looks like Nasdaq got a nice relief rally, but I wouldn't get too bullish on this thing just yet. And then, you know, paying attention here to our indicator oscillators, we have the high right here on the daily. We have the exact same high right here on the daily. So once again, same high, you know, and then a slightly lower high on the actual price action. So once again, showing some bearish divergence. You know, it's possible that this thing finds a little support and moves back up here and invalidates the bearish divergence. But again, you know, there's a lot of things showing bearish divergence right now. So we need to be very careful with that. This would look best if we came back down to like the 0.5 level, roughly, and, you know, found support essentially like right down here between like the 0.5 and that blue slope line. At which point in time, once again, you know, to me, that would look like a buying opportunity. You know, so this would look like a potential for like a long, you know, coming off of this support and off of this key Fibonacci level after getting rejected. Oftentimes, though, if you make it up to the 886, you know, you're going to just consolidate and then put in a new high. So, you know, there's definitely high likelihood that could happen as well. And then looking at the Russell 2000. Well, you know what? I did want to look at this one on the weekly too. Just kind of put it into perspective on the weekly. Obviously, this hasn't even rolled back over. So, you know, the histogram is below the slope line. This is just barely starting to roll back up to the upside. So essentially, we have to see what happens with this. If it comes up here and gets rejected before entering the bearish control zone or bullish control zone, I'm sorry, or rejected off of like the purple Stoch, you know, it's going to basically just be a continuation. It's not going to look bearish or anything in particular on this time frame at least. But I think there's a very high likelihood probably that if this shows any weakness, it's going to close back down at like 13,761, and it's going to look like a rejection off of the 786. At which point in time, you know, we would expect it to come back down and then find support here. But it could easily just be an A, a B lower high, and then a C, and get continuation down here to one of these other key levels closer to like the 12,000 area. So paying close attention to that. You know, once again, just got to pay attention and let these markets develop. But, you know, there's only so much energy and so many buyers. And at this point in time, it's looking like we're running out of buyers. The Russell got a nice move back up here. But, you know, pretty solid rejection. I don't like to see anything on a wick like over like a third of the actual candle, especially not like more than half the candle. That to me looks like a rejection. So when we have a long wick on the bottom like this, it looks like a rejection of lower prices, the same way that like a push up and then a long wick on top is a rejection of higher prices. It moved up and then someone used that as an opportunity to sell into. Now this one looks slightly more bearish because here essentially like with the Nasdaq, we had a low and then we had a higher low and then we had like a high and a higher high. Depending how you look at this one now, this is going to look like it's starting to put in a lower high than this, which is also a lower high than this. So it starts to look like potential like of just a continuation pattern. So it's more like just continual rejections, essentially like off of this area. Now you could argue that we potentially broke out here. So we really need to see what this next candle does. If it breaks down here, find support, and then we get continuation, that'll look bullish, obviously. But if it, you know, basically opens right here and then starts to sell off back inside of that resistance, you know, it's going to look essentially like the pattern is still to the downside, somewhere in between like an ascending broadening wedge or potential like, you know, retracement channel. Let's take a look at the weekly here. And, you know, we're showing quite a bit of weakness, obviously, but no divergence or anything. It just looks like it's basically selling back off. I would definitely expect if it's going to come back down here to retest the 21 on the weekly, though. So, but once again, we're at extremely elevated areas. We're leaving the bullish control zone now on the weekly. So this thing could easily just go sideways, reset, and then get continuation. So, and then Vanguard, this is basically just the FTSE. You know, we had talked specifically about this level, this key level, how we broke above it and are essentially putting in like new like cycle highs that we haven't reached since like 2013. So, you know, obviously, as this is corresponding with the dollar is essentially weakening in relation to the euro and the rest of the basket. So that kind of speaks to, you know, essentially like the European stock market strengthening. But obviously, like American stock market, almost majority of it, especially index funds, are at new all-time highs, as where this thing is not even close to its previous all-time highs. Still extremely far off. It's got a ways to go. You know, we're basically just above the 786 right now. So, you know, just to get back to all-time highs, you know, it would essentially have to have like, you know, with this is probably just a little more realistic of what should be happening right now, but essentially like another 25% off of its all-time highs. And its all-time highs were back in like 2008. So, you know, it's been 13 years since it was at those levels. But more realistically, you know, we essentially have like an ascending channel that we're inside of, and then, you know, resistance here on the top. I would expect it to basically like top out somewhere near like 67 bucks. You could easily stab out of that range a little bit, but I would expect it to at least show some weakness there. And then I'd be looking for it to come back down and, you know, find support. And it's somewhere inside this range at a higher level. So XLE, energy sector, definitely showing a little bit of strength, doing what we wanted it to do. You know, I spoke about this head and shoulders a while back and said that the last thing I wanted to see was this to like start breaking down here. But if it chopped sideways for long enough, I was okay with that, as long as it essentially like consolidated above this 47 area. So it came back down again to that 47 area. The only problem is that, you know, this is essentially just creating like a descending triangle. So if you ignore this first little like left shoulder over here, and then we just pay attention to, you know, basically like the head area right here, or even if you just don't pay attention to the head and you just start looking at this area right here, you know, we're essentially just putting in like a series of lower highs. So depending how you want to look at this, you know, you could say that we broke out and now we're finding support on the breakout. You could say that, you know, essentially we're going to skip that head, like I said, and chart from like the shoulder right here. And, you know, essentially we're just putting in like a high, a lower high, and then now potentially another lower high. So if the 821 cross back to the upside and we sustain here long enough, you know, I'd be looking for this to break back up to the upside. But as far as I'm concerned right now, even though the head and shoulders didn't play out, the longer it chops forward here, it's still just going to look bearish until it starts to actually show some strength to the upside. But overall, I would expect this to turn around eventually. You know, I mean, realistically, I think commodities, including energy, you know, will do good here. So I'm just basically waiting for this to consolidate, finish resetting our indicator oscillators, and then I do expect continuation on this to the upside. Oil had a nice move today. Next, we have the ICLN, Clean Energy ETF. You know, this thing, once again, much more bearish looking than just the energy sector in general. But, you know, basically just putting in a series of lower highs. And then once again, depending how you want to look at it, you know, obviously this is a strong descending trend line. But, you know, if we look at it like this also, we have a high, we have a lower high, potentially move back up here, put in another lower high, come back down. You know, this one had put in a low here and then put in a lower low. And then here it put in a slightly higher low. So maybe this thing can get a push back up to the upside, break out of at least this red descending trend line, and then start maybe looking like, you know, a shoulder, neckline, head, and then it's not really a too symmetrical of a neckline, but, you know, potentially like another shoulder right here, like right shoulder, and then essentially get like that, you know, bullish inverted head and shoulders break. So, you know, it's still not quite there yet, but if we essentially just pay attention to it ahead of time, I like to always have that in the back of my head in case it does. So if we essentially break out of this red line right here, if we can get that break above it, the measure move from the head to the neckline be somewhere around like our 618 retracement. So I think it's very likely that if we can close above this, that we'll easily come back up immediately to retest that $25, $26 level. And then I don't think it's out of the cards to come back up to like $28.5, $29. So paying close attention to that. Once again, very bullish on this in the long term. But right now, you know, we're basically just going sideways, resetting the indicator oscillators, starting to creep back up now. But, you know, TJD, TDMACD is looking good. You know, basically just going sideways, cooling off. And then I do expect continuation, you know, over the long term on this. Maybe not tomorrow, maybe not the next couple weeks, but eventually I do expect this to break back out and head back up to the upside. You know, and once again, we'll have to pay attention to these potential trade setups. You know, if we start to break out from these levels, that's fine. It'll look nice. If we get a push back down to like the 382 and we can get a better entry at like $20, that's even better. And then, you know, worst case scenario, this thing starts like tanking hard and we can get that buy down here at like 1675. I mean, that's ideal, but in my opinion, much less likely. But again, you know, looking for great entries on these things. I don't like to buy stuff on the highs when they're breaking out. You know, I like to look for value and buy things when they're pulling back to like key levels. So yeah, that's it for over there. So let's take a look at our cryptos now. And if you're over in chat and you can hear me all right and everything, just shoot a little message up, thumbs up or whatever. But everything looks good on my end. So just assume that it's looking good over there too. So here we have Bitcoin. This is exactly what we've been speaking about. What we needed to see out of the spot markets was a higher high. So we had a high right here. We had a higher high right here. And exactly what I was expecting. Another higher high right here. You know, we basically were consolidating at the top of the range. You know, this was our... I'm on the Coinbase chart, so I'll pull up the other one in a second. But, you know, this was essentially like our head and shoulders that we were paying attention to. This was our left shoulder, neckline, head, neckline, right shoulder. And then we got the break from this area and, you know, part of the measured move. As far as I'm concerned, we're still broken out to the upside, so that's good. We do need to pay attention. We're getting like the hard buy in the bullish control zone at the top of the range. Not always the best thing to see, but we did cross the histogram above the slope line. The slope is still red, but starting to get indication that we could see continuation. Also here we avoided the cross slightly. Here we basically got the cross and then invalidated it, and then once again here avoided it slightly. So I want to see some kind of strength coming out of this thing and really like move it up to the upside. So the last time we got the cross down here, we got a massive move afterwards. Here we avoided the cross and got a pretty decent move. Here we essentially like avoided the cross and just got a slightly higher high on that move. What I'm paying attention to though is the high, the higher high, the third higher high. And this is once again what we spoke about. We have the high here, we have a lower high, and now here we have a third lower high. So once again, 3 drives of bearish divergence. We could very easily continue on to the upside here and start to invalidate the bearish divergence. That's 100% a possibility. But for now, it's already showing its face. So we need to be careful with that. And then if we switch over also to the weekly on spot markets as well, once again, we have our high here with the blue Stoch at 92.61, and we are slightly lower right now at like 90. Getting that buy inside the bullish control zone. This is exactly what we're talking about bouncing essentially like the bullish control zone and getting continuation. What we don't want to see now though is this top out at a lower high on the weekly when price action has now made a higher high, because once again that's going to be weekly bearish divergence. And then obviously we spoke about the TJD, TDMACD, bunch of greens in a row, 2 reds, then 3 greens, then 1 red, then 3 greens, then 3 reds. So it looks like we're losing strength at the top of the trend. We are getting a green right now. What I would really like to see is more than 3 greens. If we can get more than 3 greens in a row, more than 3 weeks of positive momentum to the upside, it's going to look very bullish, as we'll be starting to gain strength. As we're here, we're losing strength clearly because we're slowly getting less greens and more reds. You know what I mean? So that's what I want to see out of this. Hopefully we'll show some strength and get continuation, at which point in time some of these like upward targets are going to look more ambitious. But as far as I'm concerned, this is just like that 62,000 that we were looking to get hit. This is like the slight overshoot of it. I think it made it up just above like 65,000, 64,896. This run was also led by Coinbase. If you were watching it, the breakout was on Coinbase first, and all the volume was coming in on Coinbase first. So, in my opinion, this was basically just the Coinbase pump leading up to it. And then since then, it basically did nothing but sell off. It did find a little bit of strength going into the daily close, but that's not what you want to see. You'd want to see volume coming in and continuation. And then if we switch over now, this is the Bitstamp chart. This is actually where all my drawing tools are and everything. So we can pay a little bit of attention here. Let's talk about what's going on. We still have essentially this blue trend line that we've been in since back here at like 10,000. We have the green trend line that's been a little more accurate on the daily. And then we broke down out of like this series of patterns we've been doing. We broke down below the blue and the green trend line. So once we broke down from them, we're essentially expecting to come back up and test them as resistance at some point in time. Inside of that situation, we had developed this ascending triangle. Ascending triangle is like basically a flat top with higher lows on the bottom. Finding strength higher and higher each time, eating through the sell wall. Got the break through that sell wall, and then obviously also you can very clearly see here. I'll make it a little brighter. Oh, went the wrong way with it. This is our head and shoulders pattern. Very clearly had a left shoulder neckline, head, neckline, right shoulder. Obviously I spoke specifically about if this came down to our support line right here and also put in a slightly higher low, it was going to look more bullish because the weak shoulder in an inverted head and shoulders is going to be more likely continuation to the upside. And then to anybody else that is involved in this trade, I'm sure you're looking pretty right now, as our first trade target was hit with a modest like 8% to the upside, never came even close to hitting our stop loss. Our second target, obviously over 12% to the upside, was hit on that initial wick breakout right there. And then finally, third target is the majority of the way of being hit. Still expecting continuation somewhere up to like that 68,000 range roughly. Also what I'm paying attention to is if we look at where, just kind of extending these out here slightly. If we look at where these resistance lines come in, this is what I was talking about, essentially breaking down below them, coming back up, trying to test it as resistance, breaking down again, finding support, and then trying to come back up and test it as resistance. So I'm paying attention now. When we get back up to that blue and green line eventually, are we going to find resistance at that like 70,000 range and then get rejected, or are we going to get continuation to the upside? So, and then, just looking at essentially like these same indicator oscillators, I spoke specifically about this right here. You know, we definitely have potential now to essentially match the Fisher. If we can get continuation up here, we can potentially invalidate that bearish divergence, but we still have a clear peak right here, a second peak right here, and then anything lower than this peak right here is still going to be potential bearish divergence that we need to pay attention to. As our previous peak is way back here, that's our first high peak. Our second peak right here is this peak right here, and then now we have a third peak developing, you know, which is, if it doesn't get at least up to 446, it's going to look like daily divergence, and then these two little peaks in between will just look like a part of the move. Now granted, it's going to be less clear, so in my opinion it's less substantial, but you know, here again on the TJD Stoch slope, we have a high, we have a lower high, and then we have a third lower high. Now we have a little bounce right here, but essentially that's what we were talking about. If we get a higher high right here on this move, that's going to be triple bearish divergence on that as well. So we did see like one candle of positive price action here, you know, like the bright green, and then immediately like two candles now of like the weaker green. So the breakout was like on a decent amount of volume here, but you know, essentially like when it switches to dark green, it means it's losing strength. Typically you want to see like a couple bright green candles in a row, some kind of continuation. So we'll have to see how today goes, but again, I mean, when you're breaking out to new all-time highs, you should see like a decent amount of buying volume coming in, you know, as people are speculating that we'll get continuation, at least to complete the measure move. So, and then if we just switch over to the weekly, let's take a look at what's going on over here. I'm going to turn off the drawing tools, and, you know, essentially we just have declining volume, even on that breakout. And then now here we have that blue slope line, the whole way up, whole way up, whole way up. And then here we lost the blue slope line. You know, essentially showing that we are now losing our strength, losing our volume. The slope is no longer bullish on this indicator. So the waddah explosion is basically saying like, you know, we're losing strength on this move. And then obviously Stoch slope, once again, we have a high back here, and then we have a lower high right here. Now again, until we leave this bullish control zone, the hard sells will not be validated. So we're paying attention on the weekly to see, do we leave that red zone? And then obviously again here we have the high down here lower, and then so far we have a higher high in price action but lower high on this. We could easily get continuation. Doesn't matter how high the price goes, as long as we see the indicators and oscillators like pushing up higher. You know, that would look, it would basically look to invalidate the bearish divergence. But we are seeing quite a few things telling us just be careful. This could very easily be a throw over, but as far as I'm concerned right now, there's no reason to not anticipate continuation until something shows us that we're not going to get it. So, and then just looking at the Bitcoin futures chart, you know, we already talked about this. We already had the bearish divergence here. We had a high, a lower high, and now we're getting a third lower high. We have a high, we have a higher high, and now here's a third higher high. So the bearish divergence is much clearer on this. So obviously the weekend price action is kind of muddying the waters a little bit on spot markets, but again, this looks more bearish. CME futures does. And then if we switch over to the weekly, you know, obviously same deal here. We get the hard sell on the weekly, come back up, get the hard buy, cross back to the upside. You know, we're basically moving slightly higher here, so that's a good sign. But, you know, we want to make sure that this maintains or at least goes sideways, kind of cools off a little bit and gets continuation. We saw our first red weekly here, then we saw a green, then we saw another red. So we really want to see this close green and then get at least one more green week of continuation. You know, otherwise it's just going to look like we're losing strength at the top of the trend. So again, I want to see like some strength and some continuation, and definitely some volume come in, because here again we have a top out on volume here, we have a lower high on volume here on this peak, and now, you know, depending what happens with this next peak, you know, so far it's looking like descending volume while price floats up. So, you know, overall that's bearish. You don't want to see that. You want to see more volume as price moves up higher. You know, as people gain confidence, more buyers enter the market, and, you know, that's more likely going to give us the continuation that we're looking for. So, and then let's switch over now. Something we haven't taken a look at in a while. This is our Bitcoin dominance chart. So let me kind of cool this down a little bit and take off some of these things here. So Bitcoin dominance obviously has been in a downtrend since like essentially the inception of all the shitcoins. Back in 2017, we entered into a very strong downtrend. We broke out of that downtrend and came all the way back up, retested the 200 exponential and simple moving average, Obviously, if you've been around, you knew that we were expecting that the whole time. We were expecting to get rejected, multiple times. We finally came back up here and got above them, but got rejected at a lower high, at which point in time we expected this to sell back off. We got the 821 cross back to the downside. We broke below the 200 simple moving average right now. And then let's turn off the moving averages and take a look at, essentially, this is a chart from way back when. I haven't shown this for quite some time, but it's funny how it developed. Essentially, this was our Elliott wave structure, the 1, the 2 retracement. What's up, brother? Good to see you. 2 retracement down here, the 3 up here, the 4 retracement here, and then the 5 topping out. And you'll notice we had a ascending support line, bottomed here, and then the third bottom was perfect right here. And again, this is Bitcoin dominance we're looking at. So this is essentially showing the relationship between Bitcoin and the altcoins, concern to the overall market cap. So when we bounced our 4 right here perfectly off the support, we get the pushback up to a new high, and then we top out at a key Fibonacci level, this purple resistance point as well. Oops. Purple resistance point as well. At which point in time we started to sell off. And then once we had put in, essentially our support line here in white, it's looking like our retracement. We had put in our A, and then the B, I was expecting to come up to a key fib level. And now here we did something that doesn't happen often, but does not invalidate what we're looking at either. We actually came back up on the B, and we put in essentially like the same high or a slightly higher high based on wicks. If you go by candle closes, it's lower on the weekly, but if you go by wicks, it's actually slightly higher. And a lot of times that will essentially get people thinking we're going to get continuation to the upside. Bitcoin is going to keep strengthening while the altcoins sell off. But in this case, it was a fake out or a rejection or, failed breakout, whatever you want to call it. But that does not invalidate this pattern. This still looks to me like a 5-wave Elliott structure. You'll notice the 4 comes down perfectly to the top of the 1, which is something we want to see. The wave 3 is the longest, longer than the 1. And then the wave 5 corresponds to the length of the wave 3 as well. That's all stuff we want to see. Very nice structure taking place, respecting key fib levels from this overall retracement, and then coming up essentially to a key level between the 618 and 786, finding resistance at a previous topping cluster here, and then getting rejected there. So now that, once again, that's our A down here, our B to that same slightly higher high maybe, and then our C coming down here. And then that C overall, when we retrace each of these individual waves, matter of fact, I'm going to put these up here real quick so you can see once again, how nice of a structure this was. Our first wave right here, we came down. The first wave here, we came down just shy of the 786. And then the second one here, from the 2 to the top of the 3, we came down to the 382. That's our most bullish retracement that we'll typically see and ideal for an overall bull market on an asset or whatever. And then here on this pullback, we came down in between the 618 and 786 and then started to bounce it. And then obviously got that double top. So now what we expect to happen is, if I'm in fact correct about this, which it looks like I am, because once we took out this low right here, it looked like we're then getting that A, B, C that we were anticipating. What we would expect to do is now, instead of just retracing that actual wave, this is often a fake out at the top of an Elliott wave, 5-wave structure. You would expect it to retrace the entire 5 waves now. So now what we're looking at is, and it's already drawn here in green. I'm going to switch it over to blue just to make it a little more clear. I think blue shows up better. But now you can see the blue would be the retracement from all the way at the bottom at 35% to essentially all the way at the top at 74%. So now we've just broken below the 382, and my target would be to the 0.5 or potentially even the 618. So we're expecting Bitcoin dominance to come back down to 51% or potentially as low as 46, 47%. Everyone is going to get extremely bullish on altcoins. Altcoins run. Bitcoin's losing market cap, and then all of a sudden that's it. We have completed the retracement, and then essentially what I would expect to happen at that point in time, again, if I'm correct on this, which maybe I'm wrong and Bitcoin just goes to 0 and completely loses market cap to all the shitcoins, definitely a possibility. But I think more likely than not, what we would see happen is, and again, I'm just going to throw these in here and then we can kind of look a little closer. That would be the one of a macro 5-wave structure. This would be our 2 retracement of the macro 5-wave structure. I'm going to turn this white just so it's a little more clear. That would be our 2 of the macro 5-wave structure, and then we would get a 3 push back up. So now if we look at essentially the Fibonacci extension of what I'm expecting to be the finish of the 1 down here, that would give us a target. So where we could expect basically the 3 to top out. So again, and I'd roughly just put it in the exact spot I would expect. If this tops out right here at this key resistance, sells back off, builds strength back at like the 0.5 level, and then we get a move back up to the 1.618, that would give us a top on Bitcoin dominance at like 90%, at which point in time, once again, you would expect the 4 to sell back off and then find support at the top of the 1, just like it did here, the top of the 1, the 2 retracement, the 3, and then the 4 find support at the top of the 1, and then we get continuation of the 5. So then once again, I'm going to get rid of the yellow fib extension, and then I'm going to put one in from the 3 to what we would anticipate to be the 4. And again, this is still very hypothetical, but we're just putting some targets out here for what we could potentially expect if Bitcoin starts to regain dominance. And I'm correct that this is macro Bitcoin overall bullish retracement of the bearish sell-off. Because if you'll notice here, all that would essentially be doing is coming back to retest some of these key fib levels. So we could basically make it up to the 886, which would correspond with that high at the top of the Fibonacci extension here, and then potentially a 5 coming in, the 1.618 coming back up and taking like almost complete dominance of the space. So if you're like extremely bullish on Bitcoin and you realize that there's just way too many altcoins and most of them don't serve an actual purpose, that's where you would get like a massive increase in Bitcoin's market cap. Or potentially like maybe this continues on for the rest of the year, another like 30, 40 weeks of downward pressure or sideways action, and then all of a sudden we go back into a bear market. The 4-year cycle, tops out around the end of 2021, and then all the altcoins start dumping, losing market cap. Bitcoin sells off, but slower than the altcoins do. So maybe the altcoins lose 85, 90, 95%. A lot of them go to zero. Meanwhile, Bitcoin sells off only 50% because of all the institutional money and all like the diamond hands. So, that would explain essentially a situation where that would happen. Bitcoin would gain dominance, and then once again, we would see like another sell-off once we break through. So again, this is all hypothetical, right now, but essentially give us an idea of what we could potentially expect if I'm correct about Bitcoin overall, and that, most of these altcoins are total trash, and this is like a completely speculative market. Now, again, just because the altcoins are trash and most of them don't serve a purpose, does not mean that there's not easy money to be made. But in my opinion, the main goal is to either accumulate like actual like money or hard assets or real estate or just overall wealth or more Bitcoin or whatever your goal is. I think most people probably are not trying to like stack Dogecoin or something like that. So, but I could be wrong. I mean, it's whatever. But, typically what you see with these cycles is that Bitcoin will gain dominance at the end of the cycle, regain dominance, but it will lose powerfully the amount. Like this was our 2017 bull run, basically was like the main bull run was through 2017. So if Bitcoin was at like 98% dominance, and then by the end of 2017, beginning of 2018, when the bull run topped out, it had lost basically from 98% down to 35%. So it had lost like 63% of the market dominance. And then here it had regained basically from that 35% back to 75%, let's say. So it regained 40% of the market dominance. And then here again, it's selling off. Now it's possible that we just go into a massive alt rally and this comes down here and puts in a new low and Bitcoin basically dies, but it's not really going to match the narrative that like all these institutions are getting in and everyone's just going to hold Bitcoin and Bitcoin's like the store of wealth. Because essentially if we come down here and put in a lower low than that previous low at 35%, I mean, it's going to look like the altcoins are really the store of wealth. And then at that point in time, Bitcoin is not functional as a payment method, and then it would not really be functional as a store of value either. So there's something fundamentally wrong with Bitcoin, or some altcoin, one or many, have just come in and completely dethroned Bitcoin, at which point in time you would have to argue that there's potential that, Bitcoin has failed or will no longer be like the number one based on market cap. So, but I think that's very unlikely to happen, as you know, Bitcoin is like the father figure of the space, and right now there's just a bunch of little babies running rampant, and you know, probably a bunch of them are going to get stepped on. So, but that's our Bitcoin dominance chart, and you know, hypothetically, what's going on here? Oh, did want to just take a quick look at this as well. You know, looking at the indicator oscillator, we have a low right here, and then so far we have not come down. This is you know, exactly the opposite of what's happening in price action right now. You know, we have a low here, and then we have a slightly higher low still on this, but we have clearly a lower low on price action. So if we find support anywhere from now, we have already printed a lower low on the weekly, but we still have not taken out the low here. So as long as, you know, we continue to sell off and the indicators, you know, the oscillators get down here to like below 6.6, you know, then it won't be bullish divergence. But if at some point in time, this thing, nothing has to happen with price action, but if this doesn't continue to strengthen to the downside and take out that 6.6, it's going to give us strong bullish divergence, at which point in time, you know, we would assume that this thing is bottoming out and get a powerful move back to the upside. Now, again, it is very possible that I'm wrong and Bitcoin is just going to die here, but I don't think that really fits with the narrative. But it's very possible that we could continue on down to like below the 0.5, down to the 618, maybe even put in a lower low. And like I said, you know, I'm wrong and Bitcoin dies, but you know, that's not really going to fit the narrative and the whole Bitcoin ETF and Bitcoin is king and the store of value and all that. So we'll have to see what happens. You know, a lot of times you will break up to the 200 exponentials, get rejected multiple times, and then come down, sort of like hang out below them, and it will look like you're going to continue to sell off, and then eventually you'll break back above them. And right now, like they're still angled to the downside, but the closer we are with price action to the 200 exponential and simple moving average, the more likely we are they're going to start just basically going sideways until eventually we can float up and then get a push above them. So this is oftentimes what happens when a market is bottoming out or a chart is bottoming out. You have a strong slope to the downside. You get a couple rejections off the 200s, you know, start to push down lower. People get skeptical. People get bearish. And then all of a sudden we get a pop back above them, consolidate above them for a little bit. And then when this slope flips back over, if this slope flips back over, and I'm right, you know, this will be entering for the first time, you know, basically since, depending when you're looking at it, 2014 or 2017, like the inception of altcoins, this would be the first time that Bitcoin would be on like a weekly bull market or in a weekly bull market. So, but once again, just paying attention to this, keeping our eyes out for like both possible situations. And then looking at total market cap, you know, obviously clearly in a daily uptrend. Oh, I meant to be on the weekly chart. Clearly in a weekly uptrend, you know, strengthening to the upside. We're obviously inside of the bullish control zone and have been for a while. We need to be careful here. We don't want to see this top out and put in bearish divergence. We're getting the hard buy at the top of the trend. Not good. We have, once again, a bunch of green histograms, 2 reds, then 3 greens and 1 red, then 3 greens and 3 reds. So now what I want to see here is at least 3 greens. I want to see at least 2 more weeks after this week closes green, assuming it does. I want to see at least 2 more weeks of green, and then I want to definitely for sure see less than 2 weeks of red after that. So 4 weeks of green would be even better. It would make me look at this much more bullishly, but right now it looks like we are losing strength at the top of a trend. It looks like this is basically like, you know, a bounce to a new high to try to invalidate this selling off. But again, we have a new high right now, but we have a lower high slightly on this. So we need to see some continuation to the upside to stay bullish on this overall. So now let's look at our drawing tools, and I'm going to turn off. Oop. Might have accidentally deleted. Yeah, I think I might have deleted them. So we'll just, I'm just going to throw in a Fibonacci extension from our previous all-time high to our low down here. And what we're paying attention to here is, you know, basically from that 20,000 top to that 3,000 bottom, we're looking at our Fibonacci extension targets. You know, we had basically started to top out here at the 1.618 and then got slight continuation above it. That obviously looks good. And then if we go from this 14,000 here down to our like 3,800 right here, I'm going to turn that one yellow. And you'll see that we have pushed up clearly up above the 1.618 here, came back down, found support, and then got continuation. So essentially our market cap, you know, basically looks like we're going to come up here to the 2.618, which is like 1.93 trillion. So around $2 trillion market cap, you know, looks bullish right now. But we are still at 1 point. Is that right? For some reason, I thought the market cap was higher than that. 1.17 trillion. That doesn't look right. Huh. Yeah, for some reason I thought the market cap was already above 1.17 trillion. Because that doesn't make sense. Something's not right on that chart. If Bitcoin is 50% right now and Bitcoin is over 1 trillion, the market cap cannot be 1.17 trillion. Am I looking at the wrong chart? Yeah, let's try that again. Yeah, that did not seem correct. So sorry about that. That is my mistake. That I think is without Bitcoin. I think that was excluding Bitcoin that we were just looking at. So, all right, once again, same exact thing drawn up here. We have from the top here to the bottom here, and then from the top here to the bottom here. That explains why my drawing tools were on it. My apologies. I don't know what the hell I was thinking. So, yeah, we topped out at the 1.618, pushed slightly above it, found support, and then we got continuation. You know, basically started to slide at the 1.382, pound support at the 1.236, came back up, and now here we are at the 1.5, finding a little bit of resistance. But again, I would expect us to push up here to the 1.618 to 2.618. So once again, our target for the total market cap is 3.1 trillion to 2.76 trillion. So roughly $3 trillion is what I'm expecting here, which, I mean, we should be able to print that like in a week or two. And then worldwide, we should be able to get there in no time. The rate we're going, if we don't have 3 trillion in crypto here soon, we're in trouble. Something's wrong. How fast they're printing money. But yeah, I mean, I would expect us basically to come up here at the 1.618 fib extension of the previous all-time high, and then the 2.618 of that, basically like when we topped out at 14,000. Those both line up perfectly together, and that's right around 3 trillion. So that's where I would expect us to come up to. I'm expecting this bull run to, you know, and that would line up basically with if we got there, you know, somewhere around the end of the year. I mean, it could literally just go sideways, kind of float up, you know, I mean, that's still going up by like almost 50% of the crypto market cap. So that's still a nice move here. But, you know, if realistically, if this gets to those levels somewhere around November, December, the end of the year, I mean, that would be like basically a sideways kind of like barely sliding up. If we continue at the rate we're going, we could easily blow through that target, you know, at which point in time, I mean, we would have to just readdress it. But, you know, we're basically going full on parabolic right now. So if it takes till the end of the year to get another 50% into this thing, something happened. Maybe they stop printing money. Maybe we have like a substantial pullback. You know, anything could happen, obviously. So let's look at Polkadot next. Yeah, and sorry about that. I knew that didn't look right to me, but I don't know what the hell. Pulled up the wrong chart, I guess. Polkadot is next. You know, we had spoken about this specifically, how we expected a breakout consolidation above that previous all-time high right here. As long as we stay above this and stay above the 821, you know, I would expect continuation to the upside. Essentially what this looks like to me is we're basically selling off. We're getting the hard sell. The indicators are sliding, obviously, but we're just going sideways. So to me, that's what we call a bullish reset. You know, indicator oscillators are going sideways, but price action, or going down, while price action basically goes sideways or puts in new highs. So, you know, to me, it just looks like, it basically just looks like, you know, we're cooling off and getting ready to go higher. So, but if we take from that all-time high, man, this is one of the ones where Kraken went nuts. So let's skip the Kraken wick back here, and let's just go from like this low right here, and we could probably get like some decent targets here to the upside. Obviously, we topped out at the 1.236, came down, finding support slightly at or above the 1 from that wick right here. So, you know, the target on dot would be the 1.618, so around like $54.60. So that's what we're paying attention to, right around here, between like the 0.5 and the 618, $55 basically. So that is Polkadot, Doggy Coin, Doge. So yeah, Doge did exactly what we said. I mean, couldn't have called this any better than we did. This was our measured move back here. The measured move was exactly where it topped out at, like 15 cents. I specifically said how we were expecting to break out of this descending trend line, at which point in time we expected to get the measured move in blue, which would take us up to 0.08, like 8.5 cents. But again, I was very, very clear that once we broke through this and we took out that key resistance line at 6.2 cents, you know, that we were going to come back up and retest the highs. And at that point in time, you know, if we got back up to the highs, I was expecting us to blow through this. I was expecting at least a minimum move to 10 cents. Nice round number. But at this point in time, you know, we've hit like all of our measure moves. We tapped out also, if you take from the bottom here to, or the top here to the bottom here. And again, this is literally the all-time high right here at like almost 9 cents, down to our little sell-off back at 4 cents. That's our Fibonacci extension. We came up exactly to the 1.618. You can see this is not luck. It's science and math, and it works perfect because we came up and literally topped out exactly at the 1.618. Now, again, no reason to get bearish on this thing. We're in a blue sky breakout right now. And, you know, if you are in this trade from the same place we entered, the initial push up was 48%. You know, never even came close to taking out our stop loss from the break right here. We basically came down perfectly, hit our entry, and got continuation. We're already up over 155% on that trade. If you're using like a modest 3 or 5x leverage, depending on what the position is, you know, you're probably rich right now because you're sitting in like 750% profit. So getting close to like 10x in your money from this simple little trade. And, you know, how long did that take to play out? We put this trade in place right here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 days to like 150% to like 700% your money, depending on leverage or no leverage. Not bad. Not bad at all. But yep, looking good so far. Definitely could get some massive continuation to the upside depending on what happens with the rest of crypto. Once again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I don't need to make a video every 15 minutes telling you what I'm doing because I can tell you weeks ahead of time and then you can see it play out perfectly. Congratulations to anyone that invested in the doggy because Elon Musk just launched him to the moon. Not literally, but. And then Chainlink is next. LINK. You know, same exact thing. Topped out here 1, 2, 3 times. We were expecting, you know, we got the perfect buy down here off the bottom of the range. And now here we are, you know, blowing through our targets. The initial target was a 17% move. I never even put up more targets on this. But, you know, very clearly, obviously, I do the same thing over and over again. So hopefully you guys see it enough times. You're learning what's going on. Second target is to retest the resistance at 37% to the upside with a 7% stop loss over a 5-to-1 risk reward ratio. And then once again, assuming that you took some profits along the way, or I did because it's not financial advice. You know, our next target is the measured move of this pattern, which again, we're in a blue sky breakout. No reason this is going to be the top right here. It's showing a little bit of weakness, but we could very easily come right back down, retest $35, and then get continuation. But at this point in time, $45 is the target on Stinky Linky. And with the 7.5% stop loss and a 77% move to the upside without leverage, That's a 10-to-1 risk reward ratio. You can see how you can literally coin flip on these things and be wrong half the time and still absolutely dominate just by using basic things. Also obviously corresponds with the 821 moving averages and all this other good stuff as well. But the truth is, I'm in Link from like, I think like $1.60 or $2.60. I can't even remember right now. It doesn't even seem real. This thing has gone so parabolic. So, and then Chainlink, let's go to Uniswap, Uni. Uni is, took out the all-time high, at a new all-time high, came back down here, retested it. I'm expecting continuation, depending how you want to do a measure move. Basically from our breakout point to the measure move, essentially just like the meat of the pattern, we would expect it to get up to about $39 roughly, which, we're at like 36 now. But again, blue sky breakout, no reason to think that we're not going to just continue to get continuation. If we go from the top here to our little bottom right here, so top to bottom right there, Fibonacci extension, we're at the 1, we're back at the previous all-time high, finding some resistance. The longer we consolidate here, the more likely we are to get continuation, at which point in time the 1.618 would be our target. So I would expect it to make a move up to $46. So let's just say, for instance, you're late to the party, you just found the channel, and you want to start like trading the same way I do. You could essentially take let's say we took a position off the 886 right now, hypothetically. Obviously, I'm not telling you to take this position because you'll just lose all your money because crypto's all going to zero tomorrow. 11% stop loss is what it gives me. I would not put it there. I would say basically if we came back down, and let's give it a decent stop loss. Let's say a 9.45% stop loss, about a 10% stop loss if we overshot, back down to the downside with a 30% move to the 1.618 to the upside. That's 3-to-1 risk reward ratio, without leverage. If you put like a little 5x leverage on it, 150% of your position, that could be a massive move to the upside. If we take this out, obviously come back down here and invalidate the breakout right there, it would look like a rejection. But as far as I'm concerned, we have the highest close yet ever on Uniswap. So, more than likely we're just consolidating before that next burst up. So probably in the next like 2 or 3 days, I'll see you at $46. We can revisit this then. Ethereum, I already know, hit our measured move. So obviously, hit our measured move back here, topped out exactly where we said, came back down, found support exactly where we said, previous high, oscillated inside this range, took out our descending trend line, at which point in time we said we were expecting breakout to the upside. This is our measure move of the triangle. Again, this is like a conservative measure move. You could easily add a little thickness onto it, depending on what exchange you're looking at. But, I would always rather be conservative. We came up here exactly, hit our breakout target, which you already know because you've been watching. Hit our target perfectly, exactly, $2,443. Also topped out at the 1.382. We topped out previously at the 1.236, came down, found support. So more than likely, if we're looking at Ethereum here, what do we expect to happen? We expect to come up to the 1.5 next, probably see a daily candle close at like 2,572, but realistically the 1.618 is our target. So say hello to $2,720 Ethereum. That is our next, basically like anticipated move. I'm not even going to put up a measure move because you should be in this trade. I was telling people at $80 to buy Ethereum. Meanwhile, nobody was in the crypto space because crypto is dead. So when it gets up there, maybe we'll pay attention to, a pullback. But in the meantime, $2,700 Ethereum looks good. Basic attention token, still just putting in all-time highs, consolidating above the 8. I would expect another move up here. $2 is still the target. Somewhere in between $2 and $2.10, but more than likely it'll probably overshoot like everything else. But $2, this thing still looks super bullish. It's never pulling back like basically past the 21, never even coming in danger of crossing the 8 and 21 to the downside. So I would just expect continuation. All right, so Riot, let's talk about this now. So, all right, what's going on here with this? This thing obviously had a massive premium. It looks like straight trash. We have a descending triangle. Everything else has put in all-time highs now, just about, except for like a couple trash coins. XRP included. Everyone's extremely bullish on XRP. It's still like 50% of its all-time high. So I'm sure it'll make it there eventually. But that's like the deadest place you could ever put your money. There's plenty of other coins that are absolutely wrecked as well. But, you know, Riot Blockchain is a mining company for Bitcoin. And look, it's just literally putting in lower high after lower high. It did take out this high, but again, this doesn't count for nothing as far as I'm concerned. We need to take out this high right here. So until we can get up above the 786 of the pullback from the top to bottom right here, I'm not getting bullish on this thing. Not to mention, we got a quote unquote confirmed breakout and then a massively bearish engulfing candle as Bitcoin breaks to new all-time highs. We engulf this by like 4x and break back inside the pattern, back below the 821 moving average. This thing looks like it's going back down to the bottom of the range. I would expect Riot back down below $40, somewhere around like 39 to 40 bucks, at which point in time we can reevaluate and, you know, potentially look at our next try to break out. But there's no reason this thing shouldn't have gotten a breakout in continuation. But again, I've been telling you this looks like trash. People are not going to continue paying premiums for trash mining companies or trash fake ETFs, which brings me to my next trash coin. And then I'm going to go on a little Michael Saylor rant because he's saying more dumb stuff. And I'm starting to wonder if he even understands how Bitcoin and taxes work. I'm sure the SEC will probably be knocking on his door soon. But MicroStrategy in this descending wedge, basically got our little breakout, got a push up, failed to even get up to the 618, slightly above the 0.5. That's good. I already was saying this pattern looks shady and I didn't expect it to go too high, but I was expecting at least to get up to the 618 before it put in a massive bearish engulfing candle, absolutely decimated any potential price action to the upside. Anyone and their mom is probably just begging to get out of this thing to get their capital back because of this wreck city. But, you know, essentially, as far as I'm concerned, we came up here and what did we do? We came exactly to where I said, filled the gap. I was expecting us to come back up here. We left a gap right here on that massive dump, tried to come back and fill it right here and got rejected. So here it is. That's our gap fill. We got it. And then we obviously dumped. It fell off a cliff once again. Maybe it finds support here, but I think it's going to be hard for anyone to ever get bullish on this thing when it continually puts in massive red candles, the ones that Kathy Wood loves. So yeah, this thing's getting decimated right now still. You know, depending, I mean, I like to think that nobody that watches this channel was dumb enough to buy into a fake ETF from some guy who doesn't even understand Bitcoin. Still down 44% from its high. So MicroStrategy looks like straight trash. And just like things like GBDC, there's no reason for people to invest in these things. There are now ETFs. Once there's a United States American ETF, it will be even less reason to invest in these. But essentially, this is just a fake ETF. There's no reason for that. Once there's a real ETF, which there are multiple Canadian ETFs. So depending on who your broker is, you know, if you're located in the United States or Europe or wherever you're at, you can probably already get access to an ETF. So in all reality, why would you ever need MicroStrategy, a fake ETF? So, and then we're going to, all right, so I'm going to go on a little rant about this real quick, and then we're going to look at Coinbase next, and then I'm going to take a short break, and we'll get into some of our other stuff as well. So, okay, let's talk about MicroStrategy and Michael Saylor's newest plot to take over the world. So, Michael Saylor has just recently come out and said that, you know, he's going to give his top executives the option to get paid in Bitcoin. So he's going to start paying his executives in Bitcoin, the Bitcoin that he was never going to sell, that was going to get locked up permanently because it's the most powerful asset. Now, instead of paying people in cash, he's going to pay them in Bitcoin. So what's the problem with that? Okay, so Michael Saylor, MicroStrategy's, you know, cost basis, the average price that they're in Bitcoin right now is around like 28,000. So just for simplicity's sake, let's say it's 30,000. So Michael Saylor, MicroStrategy is in Bitcoin at 30,000. So just for simplicity's sake, once again, let's say price is at 60,000 instead of 62,859. So if it's at 60,000 and then say he has an executive that he's going to pay his salary or whatever his portion of his salary is. And again, for simplicity's sake, let's say he's going to pay him 1 Bitcoin. So when Michael Saylor barters with this Bitcoin and pays his employee, he has to pay taxes now on that. So the taxes on the capital gains will be from 28,000, we're calling it 30, up to 62,000, we're calling it 60. So that's a $30,000 capital gain. So at a roughly 50% tax rate, depending on, you know, the state that you're incorporated in and federal tax rate. let's say we're paying 50% just for simplicity's sake, because I'm not pulling out a calculator and everything. So now he's going to pay taxes on that $30,000 Bitcoin. Okay, so he gives his employee a $60,000 Bitcoin, and then he's going to have to pay capital gains on $30,000 in capital gains. So now he's going to have to out of pocket $15,000. So he gave away one Bitcoin, and then also is going to have to out of pocket $15,000. So let's just assume that he has plenty of cash sitting around. He didn't just like use MicroStrategy's balance sheet and borrow actual money to buy Bitcoin with to speculate. So now he has to somehow borrow more money or somehow generate actual cash, maybe by selling Bitcoin, to pay for the capital gains on the Bitcoin that he's giving to his employee. And then his employee, so that's a net, somewhere he's going to have to come up with $15,000 per Bitcoin, because that's 50% of the capital gains. So somewhere $15,000 has to come from. Let's not even worry about where that's coming from. That gets owed to the government regardless. So now let's look at that employee. So now that employee got paid in his bartered Bitcoin, which is obviously taxed like capital gains, also taxed like an actual asset or taxed like income if you receive it, because again, you're bartering with the company you work for to be paid in it. So now that employee got paid $60,000. Let's assume that, he makes more than that, and then he's roughly in like a 50% tax bracket, again, just for simplicity's sake. So now that employee has gotten paid $60,000. He ends up having to pay income tax and all this stuff at the end of the year. And then by the time he pays his income tax and, pays into all like the government programs that we're required to pay into, Social Security, Medicare, Medicaid, blah, 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 blah. Let's say he's making decent money. So he's in a 50% tax bracket. So once again, let's say, depending what state he lives in, state income tax. So let's say once again, he's paying 50% tax on that. So he got a $60,000 Bitcoin, and now he has to pay 50% of that in tax. So that's costing him $30,000. So now Michael Saylor MicroStrategy has to figure out how they're going to come up with $15,000 per Bitcoin. And now this employee now has gotten the Bitcoin, but he got paid in Bitcoin. So he's obviously not planning on selling it. So now, assuming this is his only job, I'm not sure exactly where he's getting the $30,000 to pay his taxes in so that he can just hodl his Bitcoin. So for each $60,000 Bitcoin with $30,000 in capital gains, like profits off of the investment, they need to come up with $45,000. So I'm not sure where all this extra money is coming from without selling any Bitcoin. But, let's just assume they all just have this sitting around in their savings, or maybe they're going to take out more loans. They're going to take out like BlockFi loans or bank loans or something to pay the taxes on their Bitcoin, but not have to sell it. So they're getting richer and richer on paper, but never actually like using any of the Bitcoin. So I'm not really sure. And then let's just say, for instance, one more hypothetical situation. And then, and again, we're just keeping it simple here. And then we'll go on to Coinbase and I'll stop my rant. But, you can see there's some flaws, obviously, in the idea that you're just going to hodl this forever and never do anything with it, therefore not have to pay taxes on it. But if you're going to barter with it, you're no longer hodling it. So even if the Bitcoin never gets sold, you still have to pay taxes on the capital gains because you're trading it for something. So unless you're doing something illegal, like you're transferring it to them and not telling anybody that you're paying them with it, which obviously it's on the blockchain and immutable public ledger, I'm sure eventually the SEC and, IRS and stuff probably will figure you out. So I guess maybe there's something I'm missing here, or maybe Michael Saylor just doesn't completely understand it. But anyway, so now let's say that Bitcoin goes full on parabolic and it goes up to $120,000. Again, nice round numbers, keep it easy. Let's say his cost basis is $30,000. So that's a $90,000 profit, 50% tax. So that's $45,000 Michael Saylor now has to come up with. So maybe he sells some Bitcoin to pay for that. And then he pays tax on the Bitcoin that he sold to pay for the Bitcoin that he traded. Maybe he just borrows more money. Maybe he has some secret money stashed away that he hasn't bought Bitcoin with. But regardless, for each Bitcoin now he trades away, that's $45,000. His executive gets paid, let's say, nice round number, annual salary or whatever, semi-annual salary. Let's say he gets paid that $120,000. He pays 50% taxes on it. So that's $60,000 plus the $45,000 that Michael Saylor had to pay, for bartering it. So our income tax and then our capital gains tax and all that stuff, we're at $60,000 and $45,000. So now we have another $105,000 that we need to pay in taxes. I'm not sure where does that $105,000 come from on that Bitcoin you know, that one Bitcoin that's worth $120,000 and we owe, you know, $105,000 in taxes on it, and Michael Saylor bought it for $28,000. So it's still not good. I fail to see where this money comes from to pay all these taxes with if nobody's ever selling their Bitcoin. So I guess at some point in time, these people are going to have to either get a second job to pay for their taxes so they can indefinitely hodl their Bitcoin, or they're going to have to sell some of their other Bitcoin to pay for it. So now let's say Michael Saylor has to sell 2 Bitcoins. Okay, so he sells 1 Bitcoin to pay taxes on the first Bitcoin that he pays to his employee because he bartered, and you have to pay taxes on that because that's considered capital gains tax. So now he sells 2 Bitcoins for $120,000. So, you know, he's going to have to pay $90,000 in capital gains total on the 2, $45,000 on each. So now he had 2 Bitcoins that he paid $60,000 for, and now he's going to have to pay $90,000 in taxes. So that's $150,000 out of his $240,000. So MicroStrategy is still up $90,000. So that's good. But then the guy who got paid that Bitcoin, you know, that $120,000 is going to have to still pay taxes on that $120,000. So he's still going to be out $60,000. So he might have to sell that Bitcoin, which he won't have to pay capital gains tax on it, which is good because, you know, he'll have just basically gotten it and sold it right away to pay the taxes. But that's all just assuming that Bitcoin like quadruples, or in the first case doubles, but doesn't go down. And that's assuming the minimum amount of Bitcoin is getting sold to pay all this stuff with. So I'm really just wondering, like, at what point in time any of this makes any sense, because I don't see it. I don't see how you're just indefinitely hodling all this Bitcoin, but then also paying employees with it. Because if you start to sell it, you have to pay capital gains on it. And then if you give it to people, barter with it, trade it, if you do anything other than just hodl it, tuck it away somewhere in a ledger or store it on Coinbase or whatever you're going to do with it, at some point in time, taxes are going to get paid, and they're going to get paid on as income tax if you pay someone with it, and then obviously also, you know, capital gains tax if you sell it. So it actually makes a ton more sense that it's going to be impossible to just hodl all this indefinitely. So, or else I guess you're just going to indefinitely take out loans on your Bitcoin as collateral and just pray to God that no one else ever sells it and price doesn't go down. But yeah, that's my rant on Michael Saylor's newest idiotic plot. I know he's a rocket scientist. I know people love him because he's got balls of steel and he's like the marketing genius behind, you know, this current bull run. But there's massive flaws in what he's saying. And God forbid Bitcoin ever has a 50% or 80% drawdown again, because none of the math makes any sense then. So, all right, excellent. So buy the rumor, sell the news. Let's look at Coinbase. Here's our daily Coinbase IPO. So that looks pretty good. It looks like basically this is where it IPO'd. This is where it opened at. And then anybody that bought from here to where it topped out, it made it all the way up to $430. So that was good. A bunch of people were FOMOing in. So it opened at 380. People FOMOed in all the way up to 430. And then it went all the way down to 309, but it closed at 328. So just hypothetically, let's assume you were the very first person who bought into this today. You're only down 14% so far. Let's say you were the very last person who bought into this thing on the way up. You're only down 23%. That's good. Let's say you're the worst trader ever. You're like the Jay Bravo of the world. You bought the absolute top. You sold the absolute bottom. You're down 28%. So that's pretty good. So I think this is good for somebody. It's good for the people that were already invested in it. Keep in mind also there's no lockup period because this was a public offering. So there's no like limits on how much can be sold by the early investors. Normally they have like lockup periods where you can only sell so much and it's like only so many months or years or whatever. Nothing like that for Coinbase. So that looks good. That's a good candle. It's good. That's a good daily. So once again, this is why you buy the rumor, sell the news. So if the first 4 hours, it was a big green candle and everybody was pumped and everything was good. And then the next 4 hours this is what we call a bearish engulfing candle. That's where the red candle is bigger than the green candle. But in this case, It's the Kathy Wood on her knees, bearish engulfing candle. Absolute decimation. So yeah, if we look at it and just, I'm going to go down to a super short time frame so we can sort of like fib this out. So if we fib from our absolute top right here down to the absolute bottom, so basically from 430 down to 310, we were able to bounce back up, get a hard rejection off the 236, close below the 236, and then once again, bearishly sell off here. So typically what happens when you see a pattern like this, a hard rejection off the 236, we're going to come back down here and retest the lows. But seeing as to how this close on the 15 is the lowest close we've gotten yet, more than likely what would happen is we would actually take out that low. So seeing as how there's like no price action on this, what we can do is put a Fibonacci extension to the downside. So if we go from the bottom right here at 310 to the top rejection, that shooting star rejection right here, we tried to push up here and move back up to the upside, got rejected from 345 straight back down to 328. And then we can look at our Fibonacci extensions to the downside. So we would expect this to come down obviously to the 1.236, which would be $301, or potentially the 1.618, which would be $289, or maybe we get down here to the 2.618 of $259. And you know, the estimated valuation for Coinbase when it came out was $250, and then obviously it opened $130, almost 50% above that. So in all reality, we'll probably come down to like $250 to $260. I think that's pretty reasonable considering. Now I do want to go, and that's what buy the rumor, sell the news means, obviously. That's why we buy the rumor, sell the news. So now if we just kind of take a look at what we were expecting, gosh, I don't even know how I can do this. Oh, there's so little price action. It's like impossible to actually look at. I was going to figure out the percentage down, but apparently that's not going to be a possibility. So we can go from where it opened. I was talking about this in one of the videos, but well, I can just figure it out in my head. 50% down is typically where these IPOs sell off to. So if it was at $380, you know, what, 150 plus 40, so 190. So a 50% sell off of this would be like 190. Do I think it's going to get down to 190? I don't think so. I think probably 250 it'll find some strong support, but maybe 233. I don't know. I mean, it's too little price action to chart at this point in time, but it's just a perfect, you know, example and iteration of why you buy the rumor, sell the news, and you have to be particularly careful with something like this where there's no lockup period, there's no restriction, and the people that are inside this are in massive profits, and not to mention they're probably hardcore crypto lovers if they got into Coinbase early. So if you're an early investor in Coinbase, you're probably just going to dump as much Coinbase stock as you can, and then probably just buy Bitcoin or Ethereum or whatever crypto you believe in, because it's Coinbase, and you don't love Coinbase, you love crypto. And then also on top of that, I want to talk about Coinbase's numbers. You know, they showed a 250% profit year over year, which is obviously like really good. They're up 250% profit compared to like the previous year. But let's pay attention to a couple key factors here while we look at this big red candle that is Coinbase. They used to have trading fees of like 0.25%, a quarter of a percent. And then they raised them to over 1%. The average trading fee for like a retail investor trading less than $1 million is going to be like about 1.4%. So if you raise your fees from a quarter of a percent to 1.25%, or just even say 1%, you 4x'd your fees. You 4 times your fees. Even if you say 0.5% to like 1.25% or 1.4% or even 1%, you doubled your fees. So you basically, are you really making more money, or are you just charging people a higher fee for the same service? And then, you know, obviously institutional investors, you know, if you're over $1 million in volume, you're in 90 days, you're not having to pay fees. So if you're a whale or a market maker or whatever, you know, you're not going to pay fees. I think they said they averaged out to like 0.05%. So 1/2 of 1%. So once again, just like Robinhood, you know, the exchange or the on-ramp of the people is destroying the people in fees and, you know, giving the institutions and the big boys a massive break. So, you know, and I believe the statistics for where their income comes from is 97 or 98% from fees. And then the other like 2 or 3% is from their other services, which are like custodian services and whatnot. So I'm not saying that Coinbase can't grow in the future. They can obviously get more dumb people to join and pay more dumb fees. Or those people could go somewhere else and pay less fees to be somewhere else, or they can just eat the fees because they're just buying and hodling and they're only paying it one time and then that's it. Or maybe Coinbase can adapt its plan and start making more money off custodial services, storing people's Bitcoin for them, or maybe off of like a BlockFi type scenario where they're paying you like interest to lock up your crypto and then loan it to someone else. But then at that point in time, you know, you're basically like risking your crypto to make a small percentage, which kind of like defeats the whole point of having your own keys, but you don't have to worry about losing it. So I don't know. I mean, there's some big flaws in Coinbase and its future. I'm not saying it's going to like go bankrupt all of a sudden, but do I think it deserves the valuation that it had, like in the over or around $100 billion range? Probably a little overvalued. So, but you know, obviously it did very well this year in fees, but we'll see if that's sustainable, because I don't think they're going to be able to like quadruple their fees every year, because like next year, instead of paying like 1.4% as your average retail investor, you'd be paying like 6%. So I don't think if they go up to 6%, people are just going to like pay them. But I don't know. Maybe I'm wrong. People are pretty dumb. So we'll have to see. That is Coinbase. That is the end of our cryptos for today. That's all I had planned to look at. I'm going to take a short break and use the bathroom, and then we'll look at our commodities and our tech sector, and looking to keep this one in about 2 hours. That was a nice rant there. So we're at 122 now. So we still got about 40 minutes to go. Should be able to knock that off. So give me like 2 minutes and I'll be back shortly. Um, what's up, Ray? Yeah, I don't think that's right, man. Coinbase Bro upped their fees this last year to 1%, 0.25 over 50K. Unless they change something. I don't know. I stopped using them a while ago when they changed their fee structure, because I had a Coinbase Pro account forever and used to trade on Coinbase Pro and Kraken primarily. And I completely stopped using Coinbase Pro when they went from 0 fees, and then they upped it. It was maker and taker fees were 0 on Coinbase Pro, and they were like a little over 1% on regular Coinbase. And then I think it was about 6 months ago, maybe more, they upped their fees on Coinbase Pro up to 1%. Regardless, it was like, I think it went to 1%. It might have went to 0.5% for maker taker and 1% for market orders. But I would have to double check. Again, I stopped using it a while ago, so I would double check that myself if I were you. Because as far as I'm concerned, and I specifically remember getting an email from them saying that they were raising their fees on Coinbase Pro up to 1%. But I mean, I used it way back when it was GDAX, when it was 0%. So if you go from 0% to literally anything, that's going to piss people off because, you know, it was nice having 0%. And then all of a sudden you're having to pay like 1/4% or 0.5%. You know, that's an infinitely large increase from 0 to 0.25, obviously, because 0 is, you know, a multiplier. But, you know, even if it went up to 1/4%, it's still not bad. But I'm pretty sure it went up higher than that. I'm pretty sure it went to 1%. But I would double check that. Maybe you just have a Coinbase Pro account, but you don't trade often. Or maybe you just didn't notice. Or maybe they have changed something since I last looked at it, which is obviously a possibility as well. But the last time I used it, it went from 0 to 1%, or 0 to 0.5, and then 0 to 1%, or 0.5 to 1% for market orders. So, but again, I would have to look into that or whatever. But my point being is that if you use a number like 98% of your income comes from fees, and then you like double or quadruple your fees, like obviously from 0 to 0.5%, you can't really multiply that because it was 0. But then if you look at it like as a percent from 0.5% market order to, let's say, 1% market order, that's still doubling your fees. So if all of a sudden you double your income, but you also doubled your fees, did you really do any more business, or did you just charge people more for the same service? So, and again, that's my only point, because with all the extra volume that's taken place this year, if you doubled your fees and then you had all this extra volume, why didn't you do more than double? It should be like an exponential multiplier. Probably because only institutions made up for the extra volume, and then the people are still doing the same thing. So you have the same number of people, you know, small fish in the water or whatever, paying double fees, which accounts for the 200%. And then you have institutions paying almost nothing, you know, which accounts for all the extra volume. So, but again, I mean, maybe you're right. Maybe they changed it back and never sent me an email. Again, I stopped using it a while ago after they sent that message because it was just so ridiculous. But I mean, my argument was not even that they were charging fees. I have no problem charging a fee by any means, but they're making money off the spread on you, and then they're making money off the fees on you. And then it would be a lot more reasonable to increase your fees slightly than to just all of a sudden like jack up your fees, you know, from like nothing to 0.5% or nothing to 1%. So, but I mean, that's fine. I mean, you know, there's plenty of exchanges that charge less than that. I would prefer, obviously, to pay less fees because I don't feel like Coinbase provides any additional service unless, I guess, maybe liquidity. But I kind of like the lack of liquidity on something like Kraken, or, you know, obviously you could use Gemini. Depending where you're located, you could use anything. But I think they probably have one of the highest fee structures of anyone. So, but yeah, double check that sometime, Ray, and let me know because I am curious. Maybe I'll look at it after the video. So, but, you know, again, you could be completely right, and I'm just not up to date on my information. But last time I checked was when they sent out that email saying that they were jacking up fees. And that was months ago, so much could have changed since then. But again, that's my argument for why they should have made a ton more money if I'm correct about the fee structure. Okay, gold. So paying attention to gold here, you know, started showing weakness again. We did put in a slightly higher high right here. We could potentially come back down and do like a triple bottom. We could come in and, you know, basically put in a higher low after like two of the same low. But what we're really paying attention to here is, was this just bullish divergence playing out from this point to this point? And that was our reflex rally, because we have the same low, but we have clearly low here, and then clearly higher low here, clearly low here, clearly higher low here. So was that just bullish divergence, and that was our push up, and that's it? And now it's going to sell back off? Or, you know, are we going to get continuation? To me, it looks like it was bullish divergence, you know, at a key moving average. This is our daily 528, you know, found support at a key area, And then again, if I turn off the moving averages on the daily, and then we look at this, we have a long-term trending green support line here that we found support on basically. And again, this is just because if you look at it on the weekly, looks a little different. But we basically broke down from it, found support. So when we come back down here, are we going to find support on that green line and the heart line right here? Or are we going to sell back off and potentially hit our next target? My guess at this point in time is we're going to remain inside of this channel until the one time we don't. So with the exception of this failed breakout right here, I would expect this thing to just keep bouncing around inside this channel. And before long, I would expect us right down here between 1600 and 1630, at which point in time, that is a key Fibonacci level. We broke down from the 236, could not get back above it. Maybe we bounce up and test it again at the top of the channel here at 1766, at which point in time I think we would top out, sell back off. We may have already topped off and sell back off, but realistically the 382 is my next target. And then obviously we have the 0.5 down here, which in all reality, if we're going to get down to the 0.5, again, my argument is we would stay inside the channel. Now, if we did break down here and lose the 382, we could easily capitulate outside the channel, get a nice, buy back up here, hit our target, and then break back out to the upside. But in all reality, the main area I'm paying attention to is this blue support line that goes way back to the bottom back here at $1,000 and then touches down here at $1,200 and then obviously here. Now, are we going to get there at the 0.5 area? Are we going to get there way out here at the 0.5 and find support somewhere around like October next year? Or are we going to capitulate down here once we get down low and hit that trend line and also hit the 618 somewhere around like, October, November, December of this year? Either one of those situations is possible. Either one of them could never actually happen. But in all reality, I'm still not ruling out the possibility of like a mid to high 1300 like wick down here. Like, will you be able to buy spot at that price? Probably not, but I'm not ruling it out at this point in time for it to happen on the chart. So now let's switch over to silver here. And you guys know I'm a long-term, bull on gold, obviously. So looking at silver here, we specifically spoke about what's going on in silver. We're still just inside of this sideways channel with the yellow, line as our support resistance, just going sideways while gold is essentially like selling off inside of a descending channel. But we're at like the top of the range. We have this strong red resistance line here. The silver squeeze failed over here to break us out, failed to hold the support, broke down in. We could easily find support here and get continuation, but I would expect a rejection to the upside at like 26.25 roughly. And then my target to the downside is still going to be 22.60, the bottom of the range here. And now let's take a look one more time. What we're paying attention to is how this weekly closes. I specifically talked about this in the last video. It's a very, very key level. We are right now trying to save the 821 cross on the weekly to the downside. Gold crossed that cross and got a violent sell-off to the downside to the 89. If silver crosses this and does the same thing, I would expect at minimum to push down to like $23, which is already where I'm kind of expecting a weekly close, somewhere around there, or even lower down to the 89 like gold did of like $21.83, $22. So we really, really want to see silver close this week above 25.60. If we can close above 25.60, it will look good. More than likely, we're going to close somewhere in between 25.60 and 25.50 or 25.40, somewhere right in this range. Because typically what happens is we get tighter and tighter and tighter and tighter, and then we'll get a violent move in one direction or the other. And again, I'm not saying it's going to be to the downside, but we have basically the hard sell from this area and then sold down below the 821 on the weekly. We have also tons of red histograms in a row. We're below the slope line, and the slope line is still blue. If we close this week, basically anywhere close to where we're at right now without a powerful move to the upside, this is going to flip over red either this week or next week, and we're going to lose the slope on the TJD TDMACD. And that's once again just going to look extremely bearish. We've been bearish since way back here, leaving the bullish control zone, getting the hard sell back at 26.83, and since then we other than a wick, have not been able to get back above it. But the world is not running out of silver. More people are buying it. There's definitely some bottlenecks in the supply chain. But if you listen to the guys that are not trying to sell you silver, that buy like 1,000-ounce bars, there's no actual shortage in silver. It's just supply constraint and speculation from everybody from miners to middlemen. I I still don't see it. Until silver and gold start entering into very clear bullish uptrends, it's hard for me to believe that there's real inflation taking place. There's microinflation, there's supply constraint inflation, there's market shift inflation because people are buying more goods online, or all of a sudden people are buying more gasoline and they're producing less, or there's less steaks because farms are closed, or there's less whatever. But in all reality, it's not real inflation going on. The Fed is not fighting real inflation. There's deflation in the GDP. There's deflation all over the world in every aspect of manufacturing, of jobs, of everything. So what is the Fed doing right now? They're pumping tons of money into the system to reflate the bubble. They're fighting deflation right now. Technically, technology is deflationary. So everything they're doing is to try to stop deflation, but they say they don't want deflation. They say they're trying to get inflation, but they're not getting inflation. But they say we're going to let it run hot. We're not going to let it get over 2% for more than some time, but we want to average 2%. But they've been saying that for since like the 1980s. We haven't had inflation. It's been slowly going lower and lower and lower. And then on top of that, you have Bitcoin, which everybody is buying to fight inflation. Well, Bitcoin is a deflationary asset naturally. So obviously, if everything is deflating, including Bitcoin, it just has to deflate faster than everything else to still be profitable. So what is it really? It's a store of value. So what is it actually functioning as? It's functioning as gold, which is good. That's what it should do. That's, it's shifted now though. It's not a monetary, it doesn't have monetary use. It's not a medium of exchange. It's a store of value. And that's good. That's fine. It's acting as gold. It's digital gold. And that's good. But let's be real. It's not what Bitcoin is supposedly intended to be. So I want to pay attention now to the zigzag chart, gold silver ratio. This is very important to me. I look at this a lot. And what's going on here on the daily is when we topped out in March last year, it got up to like the highest level ever, 130%, 132 times rather. It takes 132 bars of silver to buy one equally sized bar of gold, whether it's in ounces or grams or whatever. So 132 silvers to get one gold. Historically, it's closer to like 50 roughly. Sometimes it's been as low as like 10, way back in the day, or 30 or 50 is like more of an average, 60, 70. Since then, we sold down clearly, very clearly on the daily, below the 200 exponential and simple moving average, back here at 100, at which point in time, silver looked much more bullish than gold. While this is going down, silver is better to have than gold because it's taking less and less silver to buy the same amount of gold. So we are clearly still in a downtrend right here. What we're paying attention to is we've been getting rejected regularly at the 89 moving average every single time. Now here, a couple times we tried to cross the 821 back to the upside and failed. This one we actually crossed it and then got rejected off the 89. Here we crossed it again, but we're looking like we're going to cross it back to the downside. But now for the first time, basically since back in this range right here, we're back above like the 50 simple moving average. But what I'm really paying attention to is here we basically got, the blue trend line above it, started looking bullish again and got smashed back down to a lower low. So here we have on the histogram a low right here and a low right here. And then here we have a much lower low right here. And then here we have a much higher low right here. Very clear bullish divergence taking place right here. If we switch over to the weekly as well, we can see once again the gold silver ratio. Here's our low. Here's our much lower low. Here's our low. Here's our much higher low. That is once again bullish divergence on the weekly. Here's our low on the histogram. Here's on the Stokes. Here's our higher low on the Stokes. Once again, bullish divergence on the weekly. So what we're paying attention to now is, do we take out this parabolic SAR and then start crossing 821 back to the upside and, essentially start moving back to the upside? I'm not saying we have to get back up here to 130, but we could easily get back up to the 200, back to like 80 to 1. Which is obviously means that gold is going up faster than silver, or gold is going down slower than silver. So either we're going to go down with both of them, but gold's going to go down less and silver's going to go down more, or we're going to go up with both of them and gold's going to go up more and silver's going to go up less percentage wise, or maybe gold goes up and silver goes down. But none of these things, if this bullish divergence plays out, it's playing out strong for gold. So the more likely situation to me is that gold would go down and silver would go down faster. So given our charts and everything else, it looks like we're pointing to the downside here. But now, if this breaks out to the upside here, which I'm going to switch off the moving averages, and let's assume that what we were talking about is correct. So here we have basically a descending trend line here in red that's on, gold silver ratio, and then descending support line here as well. We got a couple wicks here. If we switch back over to the daily, it shows up a little more clear. We basically have very strong resistance, plenty of touches, 1, 2, 3, 4, 5, 6, 7 here. And then it looks like we've broken out of it. And then we have 1, 2, 3, a whole cluster right here. So 4 touches to the downside, and we've broken out once again to the upside. So we would assume that we would get the measured move, which again, just the meat of the pattern. Doesn't have to be the absolute most. It could be the flagpole. It could be whatever you want. But just for like a, overall conservative pattern breakout of this would give us from the breakout point to the upside of like 88. The 0.5 Fibonacci from the top here to the bottom, this wick down here would put us right at like 89 or 90. So somewhere around that area is where I would essentially be paying attention to. Again, not financial advice. I'm not your financial advisor. Normally I would expect us to get back as high as like the 618, as that was like a key support on the way down. Also was a previous resistance level right here. So somewhere in that level, I would expect to be like a very, very strong resistance somewhere around here. But essentially from the measured move to the top right there, I would expect if this breakout happens, is confirmed, I would expect this to move up somewhere between 88 and 95. So once again, this is corresponding with the overall value of silver in comparison to gold going down, or the overall value of gold in comparison to silver going up. So if I'm right and this starts to turn back around, it's going to make sense to have gold and not silver, because you're going to be losing value on your silver in comparison to gold. Now, neither one of them has to actually, like, dollar value doesn't matter, because silver could literally be going up. Silver could go to $50 from where it's at right now. It could double in price, but this would go up as long as gold doubles in price faster or does more doubling in price. So maybe gold goes up 2.5 times. Maybe gold goes to 5,000 and silver goes to 50, and that would correspond to a move like this. Or vice versa. Maybe silver goes down to 20, but gold only goes down by $50. So silver loses, 25% of its value, and gold only loses 10% of its value. Like, essentially, not perfect math. But that's my point, is it's the ratio, the relationship between those two, not to any other asset or anything. It's just a matter of which one is storing value better. Now, maybe I'm wrong, and this continues to the downside, and the idea being then is that less and less silver is buying 1 bar of gold. So maybe we get a, break way down here, which I do actually want to demonstrate this as well. We have a couple very important things taking place. This was the all-time high of the gold-silver ratio, of like as far as you can chart back. And, looking at like old writings from like Roman times and like the Bible and cave drawings and stuff, I don't think silver was ever 130 ounces to 1 ounce of gold. It was closer at times to like 5, 10, 20, 50, So let's realistically, long-term trend, I would expect it to potentially come back down here to a lower level. But that does not mean that we can't sell off, get a reflex rally up. That was our A. This is our B. And then we get a C down to a lower low, which essentially we are bouncing right now the 0.5 level. So if we bounce the 0.5 level and then we retrace 0.5% of the move back down, that would take us up to our target here at $88, at which point in time, just assuming like an A equals B, this is the same exact percentage dollar move, but in percentage wise, that would essentially be a massive move back down to like retest the lows, and that's a massive move. You know, it obviously looks bigger than it is because of log scale, because it's moving dollars and log scales in percentages. So even if it essentially got like put in a lower high on the gold silver ratio, the 786 would be at 40 pieces of silver to one piece of gold, or the 886 would be at like 36 pieces of silver to one piece of gold. I've heard some people argue, you know, that they're expecting single digit, like 9 pieces of silver to one piece of gold. Maybe like the central banks like won't let gold's price go up, but silver skyrockets because of demand for like EVs and solar panels and, you know, stuff like that. So there's definitely like fundamental things that would line up with this also, like in line with the technicals. But again, my main point here being is that I think overall, you know, here you see like an A, you see a B, and then you see a C, massive move down. Just to kind of illustrate my point like a little clearer right here. And again, this is hypothetical, but you know, there's definitely some things in the chart telling me this is likely to happen. That's our A wave down. That's our B retracement. That's our C wave down. Now let's look at this in percentages. This sells off to the bottom from the top. We're doing a Fibonacci retracement level. And when it Fibonacci's down to the bottom, where does it go to? It goes exactly to the 0.5. Oh my gosh, Fibonacci is magic. And then it sells down to a new low, okay? So now let's do a Fibonacci extension of the C wave and see where that tells us we're going. So now this is going to be in blue. Our Fibonacci from the bottom here to the 0.5 down. And where does it go to? Exactly the 3.618 Fibonacci extension. Okay, great. So now we have a couple reference points for where this could potentially happen. Okay, so let's take a look at this now. So let's just assume that something similar is going to happen. And we go from the top right here, you know, to the bottom right here. And we get that Fibonacci move to the upside. And we hit the 0.5, which is obviously what I was discussing already. And then let's assume now we get from that 0.5, from the bottom right here to our 0.5. And then we're just going to project out that same blue Fibonacci extension target. And then let's look at where that takes us to now. So now, you know, if we went down to the 3.618 again, that would take us to 23 pieces of silver per piece of gold. So that would mean that we got an exponential move in silver value comparison to gold. So gold could go up, but silver went up way faster, or gold goes down, but silver goes down much, much less. Or maybe silver goes up while gold goes down. And again, it could be manipulation. It could be central bank fixing prices. It could be a new gold standard. I doubt that will happen, but it could be demand. But regardless, even if we went down to the 2.618 target, that would be 33 pieces of silver per gold. Even if we went down to the 1.618 target, that would be 50 pieces of silver per piece of gold. So just a couple random things in mind. What I'm expecting here is basically that we have essentially potentially completed our wave A, and then we're going to get the wave B right here. So silver is going to weaken in comparison to gold. And then after that, we're going to get a massive move back down eventually. And then gold is going to weaken, or silver is going to strengthen in relationship to gold. So, but again, let's not get too excited on like 23 bars of silver buying a bar of gold. I would expect both of them long-term to go up if inflation becomes an issue, or, you know, financial security becomes an issue, which I would think probably at some point in time, people are going to stop speculating as much and start just looking to store their value. So, but that is the gold silver ratio. I haven't taken a look at that one for a while. I'm going to take a look at the comments real quick here and see what you guys are saying, because I see you. All right, let's see. That's from their site. Okay, so maybe that is the up-to-date stuff then, Ray? Yeah, again, it's been a long time since I looked at that, but I do know they announced at one point in time when I stopped using them that it was going to be up to 50K and 0.25 for over 50K. That's 50,000 in volume in like an allotted period of time. Yeah, I mean, I would pay attention to it. If you trade every day, it definitely, you know, it's much more important. I think Coinbase's structure, though, typically, I think most people are buying once and then just hodling. I don't know anybody that's like a legitimate trader that's not trading with at least $1 million to pay no fees on Coinbase. Not much of a choice. Yeah. I don't know anything about Gemini. I've never used it. I'm not a huge fan of the Winklevi twins. They're a little like too conspiracy theory to me. And I'm not sure what your guys' ability to use Kraken is, Ray. I like Kraken a lot. It's got nice, cheap fees. And I like the lack of liquidity at times. You can get some awesome positions on their crazy Kraken wicks. Yeah, it's definitely different on your phone too, man. I don't really trade on my phone or anything unless I'm like, well, pretty much never. If I'm like out somewhere out and about and all of a sudden there's some crazy move, I might like buy a little something, but I put most of my trades way ahead of time. So what's up, Commander Corn? I think Coinbase, I'm pretty sure Coinbase, for people that don't know any better, as you stated, is like 1.4% or something like that. It's like over 1%. And then I'm pretty sure, from what I understood, was Coinbase Pro. Last time I checked, they had changed their maker-taker fee from 0, no fee, to 0.5% for maker-taker. Or previously, when it was 0, it was 0.5% for market buys or market sells, and they changed it to 1% for market buys and market sells. But again, it's been months, and I quit using Coinbase basically when they sent out the email and raised the fees. And at that time, I did verify that the email was correct. I also don't like Coinbase because it randomly decides to go offline whenever you like want to use it. Like whenever there's like volatility, and there's no excuse for it. If they did 2.5 times the profits this year and their company is valued at $100 billion, how come they can't like buy enough servers that their site doesn't crash when there's extreme volatility? No, they're doing it on purpose. They're shutting it down because they don't want people to be able to use it at those times, for their own profitability, in my opinion. They want to stop volatility in the markets. Gold bugs might be diversifying. Real estate can be an inflation hedge as well. Yeah, real estate's not bad. I mean, but the truth is, man, here's the thing that people forget very often, okay? Here's the thing about real estate. Here's the thing about crypto. Here's the thing about investing in high dollar automobiles, NFTs, anything with a paper trail. It's exactly that. It's a paper trail. Gold and silver, people call them money and nothing else is real money. But what they really mean is gold and silver are the real cash. Metals are the real cash. Because depending on how much you buy and from where you buy it from, if you buy less than like, depending on your state, depending on where you buy it from, whatever, if you buy less than $10,000 worth of gold or silver, there's no paper trail. The people you buy it from don't have to report it. They don't take your name. They don't take your ID. There's no paper trail behind it. If you pay with cash or you pay with your credit card and you choose not to report it, which I don't recommend, you should obviously do everything legally. There's no paper trail behind it. If you buy gold and silver on Craigslist and you use cash, there's once again no record of the transaction. There's no anything. It's literally a cash transaction. Show me where you can go and buy crypto that there's not a paper trail. Show me where you can go buy a car or a house where there's not a transfer of title, where it's not a taxable event. And again, I'm not telling you to break the law. It's different in every place. I'm not your financial advisor. I'm not, recommending anything illegal. I think it's a terrible idea. But my point is that in a world with governments monitoring everything you do on the internet, third parties stealing your data, selling your data, basically like, not to hate on the CCP, but like in a communist China future where there's a social caste system and they can restrict what you buy and they can shut off your credit cards or, shut off your bank account if they don't like what you're purchasing or whatever. I maybe want to hedge against that system and that restriction. And maybe the best way to do that is through, physical gold and silver. Obviously if you buy like an IRA or an ETF or, a digital allocation or whatever, that's not the case. If you buy over $10,000, whoever you buy it from, whether it's a pawn shop or an online broker or whatever has to report the transaction, or maybe in some states it's 3,000 or 5,000 or whatever. But it's the same way when you sell it. If you sell your cryptocurrency, that's a taxable event. So you need to pay capital gains taxes on that. So if you buy $100,000 in crypto and then it goes up to $1 million, when you sell that $100,000 in crypto, you need to pay taxes on $900,000. So you need to pay about $450,000 in taxes. If you buy, so you made $450,000 on your $100,000 investment. So you 4.5x'd it. If you buy $100,000 in gold in small increments, and then that gold goes up 5 times and it's worth $500,000 now, it went up half as much. But depending on what increments you decide to sell that gold in, maybe nobody ever knows that you sold it. Maybe it's sunk because you were on a boat out hunting and your boat sunk. And maybe your house got broken into and someone stole your gold. I don't know. My point is not to be a conspiracy theorist, but as an actual hedge against the system, against control, against somebody monitoring your every thoughts, and purchases. Gold and silver are essentially the cash of the future, the cash of the past, in the same way that crypto is supposed to be. But I have a feeling that probably with all the regulations, and people say, well, they can't regulate crypto because there's no central place where they shut it down. Well, they don't need to shut it down. They don't need to regulate it like that. All they need to do is regulate on and off ramps. So if you put money on to an exchange, or however you put money on, if they regulate that and they know you bought the crypto, then they can say, well, where is it now? And you might have to show proof where it's at now, or maybe they just trace it on the blockchain because it's a public ledger. Or if you try to sell that crypto, how are you going to sell it? Because they used to have a local Bitcoin thing where you could meet up with people on Craigslist or whatever, and you could trade your Bitcoin for something, and then people go to prison for that because that's a taxable event and you're not allowed to barter with your Bitcoin, just like the Michael Saylor example, where you're required to pay taxes on that based on your dollar cost basis. So again, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. I'm not your tax attorney. I'm not recommending that anyone break the law. I'm not telling you what to do, how to do it, when to report anything to the government. I obviously am an advocate of, abiding by the law, following the laws, and, paying your fair share. But that being said, some people might rather have anonymity. Some people might rather have a hedge. Maybe you die one day. Statistically, it's very high likelihood that eventually we all will die. And maybe when you die, you don't want to give let's say you have a Bitcoin and it's worth $1 million and you give it to your kid and, you have to pay a state tax on that $1 million. So now your kid has to pay $250,000, but your kid has a Bitcoin. Maybe he's not rich. So now what, he has to sell a quarter of the Bitcoin to pay the taxes with? And then, at that point in time, you have to worry about estate taxes, capital gains taxes on the profits. You have to worry about potential wealth taxes that they're talking about doing now, where you have to pay, 1 or 2% of the value of something every year. So, those things are less likely to happen if you have anonymity. So, and you're not going to have anonymity with crypto because they're regulating on and off ramps and monitoring everything you do. And, exchanges, you think for 1 second that an exchange isn't just going to turn over all your information in a heartbeat. You think for 1 second the government doesn't have amazing people that are tracking the blockchain. You think they don't have programs that are tracking where cryptos move to. Right now they're focused obviously on high volume, but even if you have 1 Bitcoin now and it's only $60,000, who's going to pay attention to $60,000? I bet when it's $1 million, they're paying attention to it. So, in my opinion, sure, real estate is great, especially if it beats inflation overall and goes up faster than, the increase in monetary supply, or goes up as an inflation hedge. I always advocate at least one piece of land and somewhere for you to live because everybody needs that. But I'd be very careful also. I don't think it's unrealistic to think that in the future, at least in the United States, there might be some kind of ridiculous wealth tax that you have to pay every year, or that they might have extra taxes you pay when you pass that down to your kids or whatever. So, I'm all about diversification, of your portfolio. I obviously love crypto. I love cash because sometimes you need to deploy some cash and have some, dry powder. Obviously, crypto, cash, Gold and silver, obviously love them. I'm obviously into the stock market as well. I always advocate, owning your own piece of land or home. So, I'm all about diversification. But, in those apocalyptic scenarios where an EMP goes off and, all crypto gets wiped out, or you can't use crypto or whatever, or in the situation that they decide they want to seize your gold, and everybody has to turn in their gold, which has happened in the past in the United States and many other countries as well. Maybe you want to not just have all gold, and, in a situation where there's all of a sudden a wealth tax, you're going to have to pay wealth tax on your crypto. You're going to have to pay wealth tax on your house. You're going to have to pay wealth tax on, your stocks. But if you got some cash made out of metal, maybe nobody knows you have that. Maybe you don't have to pay wealth tax on it. But, again, these are all hypothetical situations. Maybe you got to barter with gold and silver in the future. I mean, this, it's just the reason I call it a hedge or diversifying your portfolio is you cover your ass no matter what happens. And that's how I look at it. And, as far as like a home, you always need a place to live. So it's always a good idea to own a home. So, there's tons of different ways to look at it in hypothetical scenarios. More than likely, based on the Lindy effect, I would expect like probably the system lasts way longer than people think it will. Because, people said it was going to end how many times in the past, just the United States, and they changed a couple things around, went off the gold standard, move a little something here, move a little something there, and the system goes on another 50 years or whatever. So in all reality, everybody's like, oh, this is it. It's over. It's going to crash. Crypto's going to take over. I think probably more realistically than not, there's going to be a bunch of regulation. The government's going to make sure they get their fair share. And then I think we're probably going to go on with this current system or some iteration of it for another like 50 years or so. Whether it's the IMF taking over and the U.S. loses status as the global reserve currency, whether there's a, like the IMF coin or fund or whatever, and it's a basket of world currencies, and the U.S. loses their overall global currency, whether we figure out some way to back it by gold or crypto, or there's some new Fed coin. I mean, nobody knows for sure what's going to happen. All we can do is speculate. But in my opinion, diversifying yourself against all these situations, you're at least covering your ass as best you can. So, and that's my main argument for all the different things. So, okay, yeah, I thought there might have been something with Kraken in New York. I know they have really weird laws up there. That reminds me of an interesting thought I've heard before, that just like there is a market of pristine provenance gold, perfectly clean, fresh, fully historied Bitcoin may someday command a premium. Yeah, to some degree, man. That's like that whole like argument about like the blood coin. Like, oh, is mine like clean somewhere with like clean energy, and like it's like blood diamond type situation. I've heard like people talk about it. I think there could potentially be a premium, but I think the reason it would demand a premium, more than likely, like rationally thinking about it, in my opinion, the reason a clean or a whole purely mined Bitcoin would demand a premium is because that Bitcoin will have a fully traceable like ledger that makes sure that it was never stolen. Because I think it would be more likely that like an exchange would get hacked, or a wallet would get broken by some supercomputer, or somebody got scammed and then like reported it, and then like, the IRS or the whoever regulatory commission would go after those specific like ledgers and figure out where those Bitcoin went. So even if you didn't do anything technically wrong, you would basically have like received stolen property. Therefore, like, it would be potentially like confiscatable or like restricted or something. So that's the way that I would see that like more realistically playing out. I don't think, honestly, anybody's ever going to like really care whether clean energy mined like this Bitcoin, because I think proportionately like a large amount of Bitcoin mining is done by clean energy or waste energy or whatever. So, I mean, it's a good thought and everything, but I think probably less people give a shit. Like, I mean, all the like hardcore crypto advocates were like decentralized, like we're doing this, we're on our own. And like now they're all like sucking the teat of the government and like wishing for more regulations. I can't wait for an ETF. I'm so glad that everybody's getting onboarded so we can go to the moon. And it's like, are you guys really like hardcore? Like, or do you just really like care about how much it's worth? Because in the end, like the whole idea of like the peer-to-peer transfer, like you know, outside the government, no regulation, like that has died. That dream is dead. It's dead. I mean, what are you going to argue? Like the privacy coins, and like they're probably going to get shut down soon. So for all like the hardcore crypto advocates out there that are like, we're doing this peer to peer, hooray! Like, sorry, but no, it died. So I don't think there's probably a lot of like clean coin advocates either. I think it looks good when somebody like Kevin O'Leary says it and they're like, I don't want blood coins. But I think in all reality, like nobody really cares. But again, that's just my opinion. Maybe I'm completely wrong. And there's like a bunch of like hippie, like millennials or Gen Xers or something that love crypto, but also want it to be like clean. And I don't know. I don't see it. I think probably those people bought Dogecoin. So, so let's look at platinum. Haven't looked at platinum on the stream, I don't think, for a while. But this is our platinum chart. $1,174. Platinum, rare metal, not that old, but very useful in multiple things. Palladium took a lot of steam out of platinum because it was so undervalued in comparison. And so they started using it for a lot of industrial cases. But palladium can only be used to basically in like catalytic converters for gasoline engines. Platinum still needs to be used for diesel engines. So depending what happens with clean energy and all that stuff in the future, maybe platinum won't be like that great of an investment, but it's so undervalued now. It's like half the price of palladium. When I look at, damn it, thought I hit the weekly. When I look at the platinum chart, this thing basically looks like it's got some serious potential to me. Looks like it's got some serious potential to me. We basically came down from our all-time high of 2,292 down to, you know, $571 in the crash. Again, you probably couldn't get it at that price, but, you know, bounce all the way up to the 618, 61.8% of the retracement from the top to the bottom. Could very easily be done with this move right now and continue to sell back off. But what I'm paying attention to is on the weekly, this thing looks like to me it's entered a bull run. Let me turn off the drawing tools. We, you know, basically got above the 200 exponential and simple. Couldn't quite get bullish right here because it didn't quite flip over bullish. But once we got to about right here at like $1,000, this thing entered a bull run on the weekly for the first time, in my opinion. You know, it basically lost its bull run back here in April of 2013. So platinum has been in a downtrend on the weekly since 2013. So for the first time in 8 years, it's in a confirmed uptrend. Could very, very easily sell off here from, you know, that move to the 618 back down. All I want to see really is just put in a lower high. So we could, or a higher low. So we could come all the way down to 790. I would still be bullish on this thing. I would much rather see it come down to the 382. So in all reality, you know, there's a couple ways we can look at this. We can look at, obviously, the Fibonacci target from all the way at the bottom to all the way at the top. Or we could try to make like a little Elliott wave scenario out of this. Maybe this was our wave 1 up to here. We came back down not quite to the 382. Let me get rid of that one. And then from that pullback, we came up to the top right here. And then, you know, maybe we come down once again, not quite to the 382. Well, we're basically already at the 382. So maybe that was the end of the pullback and we're going to continue to the upside. Looking at it like dollar value wise to see is it valid, $440. It moved up right here. So I think it moved up about 500 this run right here. So we have the 3 is $500. So we have the 3 now, assuming that that's what's taking place right here. You know, this would be essentially, let me put up the, just to kind of illustrate this once again. You know, again, looking at this as an Elliott wave situation, we have our 1. I'll make this a little more clear. I know like this isn't probably showing up that great right now. Let's make it nice and bright white, and then we'll make it a little thick. Not sure how well you can see that, but so now assuming that was our top of the 1, bottom of the 2, top of the 3, and then maybe the 4 already bottomed out right here. Maybe it comes down a little lower based on a wick, you know, could go either way. I would say more than likely it would come down a little bit lower and get like some sort of retracement here. Let's look at what our Fibonacci extension targets would tell us. From the 1 to the 2, which we've already confirmed, we basically got to push up just shy of the 2.618. So let's get rid of that one and look at potentially a target now from the 3. Now let's look at it both ways. Let's assume it already topped out or already bottomed out. You know, the 1.618 would be up over like 1550. Now let's say it comes back down to the 528 right here, the white moving average, and tops out basically slightly above the 1, and that's also at the 0.5 in green. You know, hypothetically speaking, if we just get back up to the 1.618, that would give us closer to like 1571, around that range. If that plays out though, and we do the same move again, which the previous move was up to the 2.618, we could potentially be looking at targets up here on platinum closer to like $2,000. Now, historically, platinum has corresponded with gold. So like historically, platinum and gold are the same price. So if gold's 2,000 right now, obviously, which it is, you know, and this would be the conservative target versus like the, you know, more bullish target versus like if it pulls back all the way versus if it's done right now. But let's just say it's the 2.618 here or the 2.618 here, depending on where, you know, platinum decides to bottom out here, whether it already bottomed out here or whether it gets that move slightly lower to the 0.5. But, you know, essentially from, let's just say from where we're at right now, if it just started going parabolic, we're looking at like essentially like a 60 to 70% move. And then historically, that would be if gold didn't move at all. It would be $2,000 to $2,000, or I guess if gold went up a couple $100. So historically, you know, platinum and gold have been like 1-to-1. So obviously palladium like kind of took platinum's thunder through like industrial case uses. But, you know, in all reality, you know, platinum is operating inside of, once again, I'm going to turn off the moving averages. We've confirmed a bull run based on the weekly chart. We're operating very clearly with like a, you know, nice Elliott wave structure, very nice structure with either a potential bottom already having taken place. Now, the reason I would think though, that this is going to be like an A, a B, and then a C, and more realistically will come down lower or at least double bottom at the bottom of the channel here is, you know, look at the relation, the length of time that this 1 lasted, and then the length of time that the 2 lasted. From the top to the bottom basically was, let me pull out my drawing tool here. You guys probably don't even care about platinum. You're like, why is he doing so much on platinum? No one cares. 8 bars, so 8 weeks, 56 days, that was. So if we got similar from when we topped out right here, you know, 8 weeks or 56 days, you know, that's basically where we're at right now. So maybe it's an A, a B, and then a shallow C, or maybe it lasts slightly longer, you know, but realistically, you know, we could have bottomed already, or perhaps we're just like not quite there yet, and we'll get like a nice little push down a little lower. But at 1171, you know, if platinum goes back to $2,000 and equals gold, and gold goes up slightly, obviously, or even if it goes to $1,700, you know, that's a nice move up there, and we're essentially approaching the bottom of the channel. So even if platinum just goes sideways like 2 more weeks, touches the bottom of the channel again, and then just goes parabolic back to the top of the channel, you know, we get a situation like that. But see the relationship, I mean, between the top of the 1 and the bottom of the 2. This looks like too fast of a pullback. I think it would more likely just kind of go sideways and just not go deeper, and then we just have like an A, a B, and then a shallow C, which is completely viable. But in all reality, you know, I think we could even poke our head out here, get a little closer back to that 1, but, you know, and then retest that key moving average. But platinum looks good to me. I never talk about it, but, you know, I definitely don't think it's a bad idea to, you know, diversify some of your metals or some of your profits from, you know, stock market or cryptos or whatever into platinum as well. So, you know, and it obviously has like jewelry value like gold does, but then also has like actual commodity like utility use as well. Not as much as like silver or copper, but again, not financial advice. I'm not your financial advisor. What's up, brother? Hey, no worries, man. You can always watch the full thing later or just skip around. You doing all right, Bubbles? I hope so. Platinum looks like a big micro version of one of those long descending wedges with the capitulation resolution marking the low. Yeah, 100%, man. I definitely think. I mean, it looks a lot like silver, basically. Gold, platinum. Now, here's the thing about platinum is obviously because, we didn't have the technology to make platinum like for the last like 1,000 years or 100 years. The chart doesn't go back the same. But historically speaking, gold and platinum are trade at a 1-to-1 ratio. So they're almost always the same. So in all reality, platinum should be valued right now around 1750, the same as gold. So in relation to gold right now, I would say platinum is very undervalued. The same way that silver right now, historically, it has a, 2,000 years of history or more, depending on what source you're using. But historically, like, biblical Roman times, like silver was 10-to-1. But even in the last like couple hundred years, silver was between like 30 to 70-to-1. So even if you average and say 50-to-1, silver is still slightly undervalued in relationship to gold, but it's not undervalued like how platinum is. Platinum is substantially undervalued in comparison to gold. So, but again, we'll see what happens because maybe there's an actual shift. Like if diesel engines go away in the future, which I don't think that they will, but let's say green energy comes in and, we're using gasoline engines, but not diesel because they pollute more, or the refinement process, is more desirable to convert oil into gasoline versus oil into diesel, which is normally less of a refinement process. Let's say technologically something shifts and changes and platinum is just now less desirable or less functional or less, necessity than palladium, and palladium can completely replace platinum because we don't need it for diesel engines anymore, then that would make sense that it would have a, permanent lower ratio in comparison to gold. But even if it loses its complete utility, I think just as a jewelry value, it would still retain somewhere around that ratio to gold. So, but again, things might have just changed and they just haven't caught up quite yet. But as far as technology is concerned now, there's no actual reason why platinum should be valued less than its like historical, relationship to gold. So, but speaking of utilities and commodities, let's look at copper futures. And there's actually something I want to talk about with copper, a big misconception that people have. Because okay, obviously, like there's a lot of people getting into metals like for the first time, or oh yeah. Yeah, 100%. Physical platinum, yes, sir. In national mints or random bullion. For whatever reason, man, I like bars and coins. So it's sort of like whatever you like personally. But the truth is in my opinion, let's say that we're right about metals and they go parabolic in the future and like silver goes up to $100 an ounce. Like, I don't think it's going to matter if you have a silver eagle or a generic silver bar. I think what's going to matter is like the volume that you have. Now, there'll still be a premium on like things like silver eagles if silver's at $100 versus at $25. But I don't like right now, a silver eagle is like $35. And a generic like spot piece of silver or spot price of silver is $25, or like you could just buy like a generic silver ounce for like $30 with the premiums. So I don't think in the future that that people will pay a premium for a silver eagle of 50%. I think the premiums are just absolutely ridiculous right now. So I think the eagle premiums on silver are ridiculous. I think if silver goes to $100 or you're buying like a platinum eagle or something like that, I think it would be closer to what gold is. So if you're paying like $17.50 for an ounce of gold right now, I think you can basically buy like a generic ounce of gold for like $1,800, or you could buy a gold eagle for $18.50, which is like 5% premium. Only silver has a ridiculous premium for eagles right now. And I think it's only because the eagles are desirable, but also undervalued. But in my opinion, a silver eagle, a koala, a Courand, any of, a maple leaf, a Britannia, any of those other ones should basically have very close to, if not the same premium as an eagle. Any of like the country's mints should have the same premium as an eagle. I think right now there's just a weird stigma behind Eagles, they normally have a higher premium. But right now, if you buy a generic like Sunshine Mint, coin, or just a no-name mint coin, that's legit, the premium is the same as if you buy like another country's mint coin. And that to me is not sustainable. I think there will be a lowest level mint for just whatever, generic, whatever, but still 999 purity. And then I think there will be a slight premium above that for like every other country's mint, and then a slight premium above that for an Eagle. But I do not think for 1 second that the premium on Eagles will remain double what it is on anything else. And I think if you buy a platinum coin now or a silver coin now, and you pay a 5 or 10% premium on platinum or a 5 or 10% premium on gold, I think that will sustain much better than paying $10 premium to get an Eagle on a $25 spot price coin. I think that Eagles are extremely overvalued right now. Matter of fact, I actually have thought about if the spread goes any more in favor of Eagles over generic silver, I will just sell all my Eagles and buy generic silver, because you could literally sell an Eagle right now for $35, $36. So if you have 10 Eagles, you could sell 10 Eagles for like $350, and then you can turn around and buy 10 of any other silver coin for $300. So you can make 20% on your silver right now just by selling them and buying more. Now, the only reason it's not worth it is because it's a taxable event, but essentially you're just paying your taxes now to not pay them later on those gains. But if it goes any higher than it is now, it's almost worth just selling off Eagles and getting whatever else, because I don't think the premiums are sustainable. And honestly, when I got a large chunk of my silver, premiums were less than $1, and on Eagles they were like $2 to $3. So if I make $7 on the premiums or $8 on the premiums, and then on top of that another $10 on the actual spot value, like that means I doubled on premiums and doubled on spot. Like, that's not normal. So in my opinion, Eagles are completely overvalued right now. Completely overvalued. But that's my opinion. But yeah, I mean, any metals spot is worth it. And there are situations also though where I would buy non-physical metals. And those situations are very rare. But for instance, when silver capitulated down to $12, you could still only get silver for $25. So it was still, physical silver was still $25, but you could trade digital silver at $12. So to me, it was worth buying silver at $14 to $15 and then waiting till it traded back up to $25 and then selling out of those digital positions at like a net like 40% gain, and then turning around, taking those gains, paying taxes on it, offsetting obviously gains and losses other places, but then taking it and buying physical silver. Or if you have an IRA or something like that you're already going to put into anyway, why not just throw, some digital silver in there at $12? Obviously there's counterparty risk or whatever, but in all reality, if you're going to put into that fund anyway, like, you can't just bet on the whole world crumbling down and all the silver people defaulting. And then there's also ways to shift that from your IRA into physical by just paying the difference between the premiums. So there's definitely instances where if I'm going to trade, it's much more functional to trade digital silver because the premiums stay like right now you can buy and sell digital silver at like $2 premiums. But if you go to actually buy physical silver, it's like $5 premiums. So again, taxable events or whatever, but there's still benefits to it, like the actual liquidity of it and not having to go out and physically try to buy silver in the middle of like a pandemic or sell silver. And then, they obviously yeah, I mean, you get my point. The premium is just basically the difference between paper trading and real, because the paper trading is like what you can quote unquote buy silver for. The actual premium over spot is what you actually have to pay for it. But the truth is that if you go on Craigslist or something like that, or even if you go on like a digital exchange and look at not a digital exchange, but goldandsilver.com or something like that, they will have listed say it's $36 for a silver eagle. but we'll buy your Silver Eagles for $28. So if you're a regular person and you want to sell a Silver Eagle, maybe you go on Craigslist and you sell it for $30. So you make an extra $2 by not selling it to the exchange, and then the person who buys it saves $6. Or maybe you meet in the middle and you know, $32 or whatever it is. But, you know, or maybe like if you go to just sell spot to a random person, you know, on Craigslist or something like that, or a local group or something, or a buddy, you sell it to them at spot, they buy it at spot, and, you know, you both make out. Or maybe they buy it a buck over spot. So you get an extra $1 for it because you would have only got spot from one of these exchanges or a pawn shop or whatever. And then meanwhile, they save the premium, which might be $5 right now, by paying you an extra $1 or $2 over spot. So it's beneficial to cut out the middleman, essentially. But the idea is that spot price is basically what someone will pay you for your silver, and then the premium is what you have to, like, you know, juice their pockets with to get them to part with their physical gold and silver. And, you know, the fact of the matter is that derivatives like online gold and silver are like leveraged at like 100 to like 1,000 times like one single bar of silver or gold or platinum or whatever. So the truth is that if the whole system came crashing down, the prices of physical would exponentially skyrocket because you wouldn't be able to manipulate it with like digital, like fake gold and silver and leverage, because you can't leverage real silver and gold. And that's where like essentially the idea comes from. And that's the problem with the crypto market right now, is it's like, how much is it really worth and how much of it is just massive amounts of leverage? Because if there's like another liquidity event or solvency event or capitulation or whatever, how much is it going to sell down? I mean, it's going to dump bad because everybody's over leveraged. Same with stock market. We're at like record high leverage right now, like in all these markets. And you don't want to end up with another like Arcos fund situation where all of a sudden there's like mass liquidations and like stocks that are actual real companies lose 50-60% of their value in a week. That's going to happen in crypto eventually. It will. It's a fact. Historically, it's happened every other time. Historically, it's happened in the stock market countless times. So, you know, it's going to happen eventually. It's just a matter of when. So, but let's do a little more TA. So, copper futures. What are we at right now time-wise? Oh, yeah, of course, we're at 2.5 hours. So, way overshot. Too many rants. We're going to run through everything quick because I'm going to get out of here soon. Definitely under 3 hours. Copper futures. The thing I want to talk about with copper is that people don't understand is you can buy physical copper on like websites or eBay or whatever. You can buy actual copper bars. And the problem is people see this price right here, $4.11 for copper. And then they see an ounce of copper on an exchange or eBay or whatever for like $2. And they think, man, I'm getting a deal. But all these other things, gold and silver and platinum and all that stuff, these future contracts are in ounces. Like when you see the price, it's in ounces. For copper, it's in pounds. This is pounds. It is $4.11 for a pound of copper, not for an ounce. So you need to get copper. Like when you pay for copper, you are paying a massive premium to make it look pretty and be formed into a bar. And you're losing tons of your buying power. Even if you buy a massive like kilo bar or, you know, whatever, 1,000-ounce bar of copper, you're still paying a massive premium on it. Because this is for a pound of copper. This is, so you got to be very careful. Very careful. Because a lot of people do not realize that and they think, oh, copper's cheap and I can just stack copper. No, you don't stack copper. Don't ever do that. So yeah, copper has been on a hell of a run. Obviously, it bottomed out here at $1.97, you know, in the massive sell-off. And since then, you know, it's up 100%. It's doubled. I don't think it's done by any means. I think copper is the future. It's an awesome commodity. Definitely has huge potential. Paying attention to the actual copper chart, you know, it went into a bull run. Did it again. Went to the 4 hour. Went into its bull run basically like confirmed roughly around here at like 275. Since then, it's up to $4. But prior to that, you know, it basically went into a bear market at 350. And that bear market was from April of 2013. So this thing was in a bear market from 2013 till basically 2020. So it spent the last 7 years like consolidating in a bear market. You know, based on the 200 exponential and simple moving average. So in all reality, like, what are we going to get? Maybe like a 2, 3, 5, 15, maybe just another 7 years of bull market. I expect copper to go to a new all-time high in this commodity cycle. So if the previous cycle was $4.63, this thing still has plenty of room to run to the upside. But in all reality, based on like infrastructure, the copper pipes, copper wiring, like copper in electronic vehicles, copper in all the wires that need to go into solar panels, copper in all the like fixtures, like as we replace all these lead pipes, as places like, India, like start to build up their infrastructure, like the Middle East, like all worldwide as China continues. I think that copper will be one of the best performing assets in the next like 5 to 20 years, maybe 50 years even, who knows. But I think copper is going to have a massive bull run. So I know people are like, oh, it's already up 100%. Copper had a huge run. It could 100% pull back and have a substantial pullback, but I don't think it will go lower than like $3.30. And that would be if this is like a 1, 2, 3, comes back for a 4, and then goes parabolic, at which point in time, if you get it at 330, I think it'll go to like 660 or something. So it's like a 100% move. But this to me is a long-term investment, but not investing in physical copper. Don't invest in physical copper. Do not buy bars of copper. All right, so UEC, you guys know where I feel about this one. We closed back below the 21. We could very easily save it. I got long-term targets for this. We're getting the hard sell. We're the below the slope line on the TJD, TDMACD. I think there's a high likelihood that we're going to get another consolidation, but potential top is already put in here. You guys know how I feel about this, that we potentially already topped out, and I'm expecting some kind of like decent retracement. The previous retracement from the high right here to the low right here, lasted for months. That was from May 2020 to October, better part of the year. So, the topping out right here could easily come back down to like the 382. We could easily get a slightly higher push, but I think in all reality, this thing's coming down at least a little bit lower, but we'll play it by ear, see what happens. I don't think we're going to get some massive deep retracement, but, maybe we do. We'll have to play it by ear. But, I would expect at some point in time, uranium to actually start moving. But again, it could take 5 years. It could take 3 more years. But I think, if it takes 3 more years and then price starts moving, I think we got a 20-year bull market as, nuclear power comes back into favor. And people realize, like, we can't just stop using sustainable, especially like zero emission stuff, and just start using solar or wind or water. Like, we have to actually build like hydro dams. We have to build solar panels. We have to build electric vehicles. We have to build all this stuff. It doesn't just pop up. And what do we need to build it? Well, we need to use oil, or we need to use nuclear power. So here we got the uranium ETF. Same thing, triple bearish divergence here at the top of our potential target, selling off, showing weakness. The last 2 times it got picked back up around where it's at now. We could very easily have a big sell-off come in. Obviously, triple bearish divergence. I've showed it a bunch of times. Not ready to get bullish on this thing just yet. Very likely going to see it come down to the 200 moving average, or minimum $17 around the 89. So AG, First Majestic, still doing what we're talking about, descending triangle, depending on how you look at it. It's just putting in a high, a lower high, and then here, same high, but lower once again. I told you about this. If we come down here and we put in like this same low right here, and potentially put in like an inverted head and shoulders, we could easily bottom out at like 1530. We could also very easily come down lower to like the 200 exponential and simple. My primary, you see the big green box. You know what I'm looking for. I'm looking for like 13 to 1450 on this bad boy, and then a massive rip to the upside, like a doubling or tripling. Not massive compared to crypto, but USAS. Oops. you know, gold and silver corp. It's going to do what gold and silver do, but this thing is obviously showing quite a bit of weakness. Still expecting a further move down, at least to retest the low. I mean, it's not showing any strength. We're still below the 821 cross to the downside. I think we're going to be able to get this thing for $1.68. So that's what I'm paying attention to. Very likely we hit $1.96 and that was the bottom and it bounces. But again, depending on what the gold and silver charts do and what that gold silver ratio is telling us, I'm not ruling out further downside on this stuff. Caterpillar, obviously still very bullish on Caterpillar. As far as I'm concerned, there's a bullish reset taking place. Indicator oscillators are cooling off while we essentially go sideways. We do need to be careful of some slight bearish divergence showing up in the chart right here. But again, you know, we could easily invalidate that, come up here and get a powerful move. I don't expect Caterpillar to just die or anything. But if all the markets start selling off, if stock market starts crashing, we could very likely get, you know, a nice pullback. But again, Caterpillar is not a big mover in one direction or the other. And I'm massively bullish on, you know, diesel machines building the new world. So Caterpillar is good. Tilray, you know, still not ready to get bullish on the marijuana space yet. I'm all about that green energy, or in this case, the lack thereof energy. The, you know, play it cool, man. But whether you like that THC, that CBD, or you just like that money, I think there's a ton to be made on the marijuana sector, but it's not quite time yet. We could very easily bottom out right here and get the move up. I would at least expect at some point in time this to fill the gap at like 1917. But, you know, we're in my green box area. We're where I want to be. We're in the buy zone. I want to get it a little lower, but I don't want to be too greedy. I could very easily see it come down to $10 though. It's still at $17. So I'm not rushing in to buy this thing, but I'm also not hesitating. So I think anywhere from like 17 down to like $10 is juicy. But we entered that weekly trend to the upside. I'm on the daily chart, but this is the weekly cross of the 821. We entered that weekly trend and we're at the 200 exponential, 200 simple down here at $12. I'm not going to get greedy. I'm going to start really buying this at like $12, $13. And I'm going to love it the lower I get it. I'm just going to keep buying. But it's not financial advice, obviously. Don't lose all your money buying marijuana. But you're probably better off buying marijuana stocks than buying marijuana and smoking it. Because you only end up with stocks if you buy the stock, but you just get high if you buy the marijuanas. But if you buy the CBD, maybe at least like your back pain or whatever feels better. So there's benefits to both. But I guess why not both? You know what I mean? Do what you want to do. Aurora Cannabis is the weakest in the space pretty much. Canopy Growth looks a lot more like Tilray. But this massive inverted head and shoulders is looking more and more juicy by the day. Just like we were talking about with Bitcoin though, if we can put in a higher right shoulder, I mean, we could come back down here to $5.30 and have a very symmetrical head and shoulders. If we bottom out at the 618 right here at like 685 though, it's going to look real juicy as we're showing strength on the right shoulder and then moving to the upside. But, you know, you guys have seen my trades on this one. You know, I think we're minimum going back to like $33 on this. So if we can get it at $5 or $6 and it goes to 33, that's great. But if we get it at 7 and it goes to 33, you know, it's still fucking great. So again, these I think are going to be like the hidden gems of the market, especially like commodity space, as like, you know, things like uranium probably are not going to move like this, but when these things move, they're going to move. And the only fundamental thing that's going to change these Canadian pot stocks for me is if the United States like completely legalizes / decriminalizes it, and all of a sudden a bunch of like American companies get listed on the United States Stock Exchange, and that's probably 1 to infinite years away from happening, as there's probably always going to be some states or some people or some form of governance that will not let that happen on the federal level. So, but realistically, you know, we could very easily see I mean, I want to say $6, $7. But again, we're not far off now, so I'm not going to get greedy with this thing. But, you know, we may be potentially printing some daily divergences here, or we may just get continuation and keep selling off. So, Lemonasty, man, I'll tell you what, it's doing exactly what we said. You know, we had basically support here, lost support here, retested it as resistance. I told you at the cross back here what I was doing, $150. Well, I wasn't doing it because I didn't buy lemonade, but what I would do, $150. You know, since then, we're down to 88. The thing's down 50% since the cross back here, and it's showing no form of life. Could not get above the 21. Still, parabolic SAR to the downside. Could not get above our very clear line right here. I think very, very likely this thing is showing weakness already. You know, it could potentially do something here and just surprise us all, but in all reality, I think lemonade's going to $54. Which would be like support here, support here, support here. That's our next parabolic support line. And it's almost like a flat bottom right here. And to tell you the truth, this thing opened at $50 on the IPO, and it's back at like the top of that initial wave. Maybe it bottoms out right here and gets continuation, in which case like it saves this trend line and I could get bullish on this. We get across to the upside, we save the trend line. But in all reality, it looks like it's about to just wreck all these people. Because, you know, a big portion of the people who bought into this thing are probably going to be net sellers if it breaks down below $69, because there's no support. Because this was basically just one single parabolic daily candle. So this buying happened in one day. It could very easily, that amount of selling could happen in one day. So $50 on lemonade is looking more and more likely by the day. So you might be better off standing on the side of the road selling lemonade in paper cups with a mask on than investing in lemonade. All right, so we're about to hammer out this tech, and then I'm leaving, as we're going to hit that 3-hour mark soon. Dixie, we already looked at. Let's look at Tesla. Oh, look. Oh, we got lucky again. Gee, what are the chances? Tesla went exactly up to our red box territory. What's going to happen now? It's going to find support somewhere in between where it's at right now and probably $640. Maybe it breaks down here and loses this blue trend line, but I expect a bunch of buying support to come in. You know, found support at the bottom right here at the 0, found support at the 236 right here. I would expect us to find support at the 382, which would correspond with our blue, you know, ascending trend line. So I think very likely where I'm looking for a potential bounce, and, you know, once again, upside potential is going to be right here, at which point in time it would look like a low, a high, a low, a high, a low, and then, you know, once again, I would expect it to come back up to a higher high, maybe to the 786 or 886. Again, we could find support right here and continue up, but this looks more than likely, you know, what I'm paying attention to right now. You know, it topped out exactly where I said, so I'm not going to get greedy with it. NEO, you know, NEO is obviously a very strong downward trend. Remember, this thing was at like $3 and about to be bankrupt a year ago. So it could easily go back down to $3. I don't think it will, but we have basically a flat bottom support right here and a series of lower highs. You know, this thing is down from the top, $67, down at $37. It's down like 50% still right now after tech's been rallying. Most of the Chinese stocks do not look good. The Chinese economy on paper does not look bad, but if you actually like dive deep into it, China is not doing great right now, and their stock market is not doing great right now, and they're, you know, they're basically, I think, like a couple months ahead of everyone else. Looks like a descending triangle to me. You know, we have essentially a resistance / cluster of moving averages, just decimating price every time it comes even close to it. So until we break above that, these massive bearish engulfing candles will probably just continue to take us down to the same low or potentially lower lows, at which point in time, you know, once again, this descending triangle is going to look awfully juicy to the downside. And if we do get the breakdown of just this little pattern here, just this little descending triangle right here, and we take the measured move, you know, and again, this is going to be in log scale, so it's going to look big and scary. I would expect, like, I mean, this thing could go $26, $23. So, you know, while long term I'm bullish on NEO, the stock, right now it looks like death. And there's no signs of life. Hillion, I'm not even going to mess with this right now. Again, you know, it's 100% retracement from the low. Went parabolic up to $60, and it's right back down to 10. in the future, this thing has some serious potential, replacing diesel truck engines on semis with electric or natural gas powered engines, or a combination of the two. Definitely has some serious potential, especially if a bunch of electric trucks take over the world and they're all automated, and this company can figure out how to reuse a bunch of old trucks that are useless. But this thing could also just die, because it already just, I mean, it went up to $60 and back down to 10. So it just lost. I mean, granted, it's 6x, but, it also just lost 84% of its value. It's like a crypto right now. So careful. Not financial advice. Baba just got hit with that big boy fine, 2.4 billion. Once it got that fine, got a gap up, that's basically just like, oh, thank God it's over. The government's off our shit again. And then what happened since then? Basically sold off that candle, but left a big gap down here. So in my opinion, very high likelihood we're coming back down to 224 to retest it. But again, giant descending triangle, flat bottom support, lower and lower highs, could not break out of the triangle, got rejected by the 200 exponential moving average, slope to the downside on the exponential, flat slope on the simple. This thing looks like it's getting ready to just roll over. Massively bullish on Alibaba overall. If this is going to be a 5-wave structure sell-off, this thing could easily retrace the waves 1 through 5, and then, I don't need to show you this. Same chart still. Nothing has changed. This could basically be our wave 2 down here, wave 3 right here, and now we're about to retrace this 5-wave structure, which makes up the entire wave 3, which if we do, the 0.5 is $204. The 618 is $182. But I don't want to see it get down that low, as that would be taking out the top of the 1 for the macro. So basically, $200 looks like a buy to me. But we'll see. We got to play it by ear. I'm looking for some kind of strength out of this thing. Hopefully with that resolution, one more sell-off, close the gap, and then we can start seeing some bullishness. Zoom video. Once again, looks like gold. Descending channel. Just continuing to operate inside the channel. Continuing to get smashed by the exponential moving averages. Slightly above the heart line. This chart looks almost exactly like gold. I'm expecting it to come back down here. I think Zoom's going to be at $268. Massively bullish on this thing long term. I don't think people are going to stop using Zoom. I don't think somebody's just going to show up overnight and dethrone Zoom. But, I also don't see any signs of life out of this. Maybe we cross the 821 back to the upside, get back above the 200 exponentials, consolidate at the top of the range, at which point in time we could see some move back up to like the 618 or at least the 0.5. But again, it's not looking bullish right now. PayPal, came back up, topped out exactly where we said at the 618. We're looking for it to come back down and then find support at a higher low. We have a low down here. We have a higher low here. I want to see another higher low and then continuation back to the upside. And then we'll have essentially, rather than just this descending move down here, we will be starting to create like an actual useful, somewhat bullish pattern to the upside. Something along these lines here. So come back down, retest the bottom of the range, somewhere around here, find some support on the moving averages, continue up, eventually take out the previous high. I'm bullish on PayPal, but, if crypto starts getting wrecked here, PayPal is going to get wrecked. If regulations come out and they start regulating all these, like, things like Coinbase that are not calling themselves an exchange, they're calling themselves like, a cash settlement service. Same with PayPal. If regulations start hitting them like they do banks, I think some of these things could take a massive hit. Will that happen? I don't know. I think regulation is probably one of the biggest things to be worried about if you're a non-bank doing bank stuff, though, including exchanges, PayPal, Square, all this stuff. So, and I think if you're a bank, you're probably like going to spend a ton of money like lobbying politicians to get these things regulated, how they regulate banks, because it's hurting your business and it's not fair. Apple, still massively bullish on Apple. Our trade has played out here. We're done. We hit the measure move. We're slightly short of our target to the upside. This is trailing stop's going to get hit and take me out of this trade if it goes below like 129. But, as far as I'm concerned, this was a long-term accumulation area, and I expect Apple to go much, much higher. this one, in my opinion, is much less speculative than the majority of the tech space, as it's got a longer history. It produces actual things. You know, it's had net positive earnings, cash flow. You know, I've been using an iPhone since iPhone 1. You know, I like Macs. I think Apple just does good stuff, and they do it better. So I'm bullish on Apple still. We'll see what happens, though. It's hit our target. Same thing with Pinterest. Pinterest hit our target. I mean, it's like $1 short. It's showing, obviously, bearishness. This is a massively bearish candle. I think most of tech has bounced, put in a lower high, and topped out. I mean, we topped out at the 886. We hit the measure move, you know, hit our target right here, sold off bearishly, got a shooting star. That's a massive bearish shooting star, too. I mean, it could have stayed a little green at the bottom, could have had less of a wick, but it didn't. It looks like it basically got sold into completely. So at this point in time, I would expect continuation on this. It could very easy just go sideways, kind of down. Most important thing is find support along this blue parabolic trend line. Find support somewhere between the 0.5 at $73.50 and $77. Or maybe find support right here and continue to the upside. But still very bullish on Pinterest. I think it's a great, you know, it has great potential. People love Pinterest. You know, they like to post their pictures of things and stuff and talk about recipes and crafts. Semiconductor ETF, SMH. You guys know how I feel about these. I am overall less bullish on Taiwan Semiconductor. Overall, I would rather be in an ETF on semiconductors right now, because there's a good possibility that Taiwan might not exist soon or belong to someone else. Not pointing any fingers, China, but it sure looks like you're getting ready to take over. So, you know, Taiwan Semiconductors, maybe not the safest bet right now. But again, diversification is great. I think it's good to own, you know, stocks and stuff all over the world and different asset classes. But Taiwan maybe not looking so juicy right now. But, you know, ETF looks good. Looks like we're potentially just going to top out right here, sell back off, and once again, higher low. You guys know how I've felt about this since before the gap up. I would love to get back into this again at a lower high and keep grabbing these up, as I think that there's going to be a massive push towards like nationalization of semiconductors, because all over the world people are like, we need these semiconductors, and China's hogging them all, and what the hell. Meanwhile, everybody else is like not able to make cars or computers or literally anything now, because we need semiconductors for literally everything. Like, how are we going to put microchips in people's brains if we can't get semiconductors? So come on, guys. We got to build them here. Come on, man. We got to build some semiconductors in the USA. Come on, man. So yeah, semiconductors, massively bullish in the space. Sort of scared if you're like just in Taiwan Semiconductors right now, but I'd much prefer like an ETF in the semiconductor space right now. But definitely bullish. This is like the digital caterpillar, in my opinion, the necessity of the future. Walmart still doing exactly what we said, topping out at the top of our descending broadening wedge. Still think there's a very high likelihood we get a massive push up to 144, at which point in time that looks like a selling opportunity, as we'd be closing this massive gap that we left behind right here. We're closing part of it slowly but surely, but I think we need to break out, close this gap, come back down, find support, and I'll take my long. Or if we gap up, I expect a dump and I'll take my short, and then we'll see what happens. But there's a high likelihood Walmart is trading at $118 soon. There's an, in my opinion, equally high likelihood that Walmart is trading at $156 soon. And in my opinion, it's right smack in the middle, which is the worst time to take a trade, at resistance with a gap above its head. So I think more than likely we get a gap up and then a massive dump. But bullish on Walmart overall, because people need stuff and Walmart sells it cheap. ARKK, we're going to run through Kathy, wouldn't want to be you right now. ETS real quick. And again, you guys know how I feel about these. Massively bullish on the overall spaces and her ideas and whatever in the long term. But in my opinion, these trades are way overcrowded and they are way too concentrated. And there's a lot of stuff in each one of them that doesn't fit the actual fund and what it's supposed to be. It's just like a concentration of a bunch of the same stuff. It's like, let's make 5 different ETFs, call them 5 different things, and then put Tesla in all of them. Or Square in all of them. Or like, I mean, you guys get the point. You know what it is. You know how I feel about these. And I love busting Kathy's balls. But in the end, I believe in the idea of what she's behind. And long term, 5 years from now, I think probably all these will be in a nice profit, or the stock market will be massively dead for like a 25-year period. But more than likely, these will all be well in profit. But right now, they all have underperformed. You know, overperformed up to here. And then I said, I'm out. I'm done. I'm not participating. Good buys off the exponential and simple moving averages. So far underperforming and putting in bearish candles. Very easily could find support and continuation. But, you know, could not make it up to our target. That's ARKK, innovation. Next, we have ARKF. Wait, did I say the wrong one? Oh, FinTech. Sorry. ARKF, FinTech. You know, again, massive underperform with a bearish engulfing candle. Could not get up to our targets. Sucks. ARKG, Genomics, once again, massively bullish in the long term. But, you know, we have a double bottom with lower highs. And once again, shooting star, you know, couldn't even get close to our previous targets. And then ARKW, are you guys sensing a pattern here? Once again, lower high, you know, flat bottom low. Couldn't even get our measured move. Couldn't even get our Fibonacci targets. Massive bearish engulfing candle. Kathy better borrow some money and buy up all these funds. She better convince Elon to invest in the ARKs, or else they're going to be SHIT real soon. You know, and I'm not like hardcore ragging on Kathy by any means. Again, you know, I think she's doing great overall and had great years, but these are massively underperforming the rest of the tech space. You know, they're all still down like 20% or more, and most of them had over a 50% sell-off, like initially, or around 50%. So that's next generation internet, which again, there's a ton of stuff that's not internet in there. And then autonomous technology, you know, same thing. Massive underperform, lower high, same low, descending triangle, bearish engulfing, not quite. Massive underperform, could not make it up between the 618 and 786. You know, I expect further downside on this thing until it shows some strength. It is above the 821, potential cross to the upside. Could see some life out of this thing, but I would rather wait for it to show some signs of life and potential to move back to the upside than just FOMO in now, and then it comes back down here, you know, consolidates around the low and then sells off. I think it's more likely to go to $72 than it is back to 100 right now. But, you know, we're right at 85. So, you know, you're right in the middle. This is the worst place to take a trade from, in my opinion. You know, it's equal 1-to-1, you know, to the upside or to the downside. It's a coin toss right now with an equal move in both directions. That's the worst trade to take to me. It's a coin flip with a 1-to-1 risk reward and a 1-to-1 probability. So there's nothing to be done right here. But overall, it's got to convince me it's bullish before it just sells off again, because that's what it looks like is going to happen. And I'm not even looking at the new ARK fund, because the whole, you know, space has nothing space related in it. It's loaded up with a bunch of the same stuff and has nothing to do with space. It makes no sense and is the least useful of all of her funds. But again, you know, I'm happy for Kathy. She's a independent, strong, older woman that was probably attractive a couple of years ago. And she had, you know, a year or two of good returns. So I'll eat my words in like 5 years when she has steady returns over, you know, 5 years or a decade or something like that. And honestly, I think she has the right idea with all these funds. But right now, they got way overcrowded. She did way too much marketing and got way too much inflows for way overcrowded trades. So just to touch on Bitcoin one last time, you know, selling off still as the daily, you know, this whole time we've basically just been selling off. This thing could easily flip back over green, at which point in time, if we put in a bullish engulfing candle and we close the next 24 hours back above 64,000, I'll be massively bullish on this thing. We take out this little indecision candle, But, you know, right now on the daily, if we keep selling off, it's going to look like the knife came up here, stabbed up the top. We got to sell, we got to buy. We're going to just cross this over, get a sell again. We're going to get a rejection at a lower high. We have bearish divergence all over the freaking place. And then this was just a Coinbase pump. Buy the rumor, sell the news, and people get wrecked. You know, we'll see what Coinbase does tomorrow. We'll see what all this stuff does tomorrow. We'll have more information. But in the meantime, you know, I'd be very careful in these markets, because if Bitcoin starts dumping here, you know, and this was just like a throw over, I think alts are going to get wrecked. So I'm going to jump over to comments here real quick, and then I'm going to jet because we are at the 3-hour mark exactly. My man, glad to have you back, Commander Corn. I know you're like hyperactive in the comments. I'm always glad to see that love. I know it's good for like the algorithms. Tilray since the gap. Yeah, man. I mean, I'm massively bullish on Tilray. I think, like, honestly, 1 to 5 years from now, anywhere around these levels, any amount that we put into these pot stocks is going to be absolutely decimating the world. Like, I mean, you see my target on Tilray is $1,000. Call me crazy. Call me the Kathy Wood of Tesla, but Tilray's going to 1,000. And even if it goes to 300, you know, what is that, a 15x from right now on a commodity? I mean, I consider it a commodity. Look, I don't care what you say. Like, there's a future in THC or CBD, 100%. I mean, because if the government can make money on it, they're going to tax it and they're going to legalize it the same way they did cigarettes. You know, the little racist like smear campaign, like anti, you know, paper, anti-weed, whatever campaign like that. It worked since Prohibition, but it's dead now. Nobody believes it anymore. The people want legal marijuana and CBDs, and I think the stocks are going to reflect it real soon. So I think 5 years from now, they're going to be absolutely the trade of the decade. They're going to be the Bitcoins of the stock market. Apple's ARM chips. Yeah, oh yeah, man. I mean, Apple's huge, dude. Like, I mean, don't get me wrong. AMD, Nvidia, Intel, you know, even Microsoft now with this new military deal and the Nancy Pelosi inside trading. I think all of these companies are going to kill it. Like chips, microprocessors, like all these companies are going to do great. And honestly, like Microsoft is overdue to have some kind of like positive like momentum to the upside. I mean, it's not going to go away tomorrow. We know that. And you know, they've been doing crap for a while, so they were bound to do something here. And I think long term, we really just got to see what happens. I think the stock market overall is overvalued. I think as we see how the economy pans out and what happens with like more money printing, what happens with the IMF, what happens with, you know, United States global reserve currency, what happens with all this stuff is still up in the air. All we can do is speculate. But in all reality, I think that we are at the area now where there are very few things with good risk reward ratios. So even if it's a coin flip right now, I think the potential to the upside versus the potential to the downside on a 50% chance of either taking place looks like crap on most things. With the exception of some of these commodities like pot stocks, precious metals, etc. But again, that does not mean that we're not going to have more downside before we have upside. But I think I think the crypto market is extremely overvalued or overdue for a correction. Even if it's 9 months before that correction happens, we're at dangerously high levels right now. People are dangerously levered. Same with the actual stock market. I think most stocks are dangerously high leverage right now and dangerously high, you know, levels. You know, when you start saying like, okay, we're no longer going to look at, you know, earnings, like PE ratios. We're going to now just look at like sales to earnings ratios, or price to sales ratios. I think when you start changing like the way you do math and the way you figure out values of companies, you better be sure you're right. Because if you're wrong, you're going to get wrecked. So, but again, like always, guys, appreciate everybody checked it out today. Appreciate, you know, all the love in the comments. Make sure you like, subscribe, all that good stuff. Share with your friends. You know, break it down into 1 hour segments. If you can't take all 3 hours, of me just giving it to you how it is. But I mean, the fact that I'm pretty much always lucky on pretty much everything I say, you should probably pay close attention, as I think on a long enough time frame, I'll be probably right on everything. So good to see you guys in here. Bubbles, Commander Corn, everybody else. I don't see any other names currently, because Commander Corn, my man's on the spam game, which I'm not mad about. I'm glad to see you interacting. I feel bad that it takes you so long to jump back over to chat, but I really got to rattle this stuff off or I end up on here for like 5 hours. And I'm not trying to break my own personal records anymore. That was long enough. But appreciate you guys. It's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. I am not your tax attorney. I 100% am not your accountant. I want you to pay your damn taxes. Don't break the law. But in the end, do what you got to do to protect yourself, protect your wealth, protect your family. Make sure you're not spending all your time on the damn internets or staring at the damn charts. Make sure you're out there living the dream, not afraid of the CVD. Live your lives. Because in the end, I mean, this might just all end up being we overreacted to something that wasn't that dangerous. It might be this whole stock market crash was going to happen regardless, and this all some big conspiracy theory, or maybe in the end it was all done with good intentions and it just kind of worked out like this. The truth is we'll probably not know for another 5 or 10 or 50 years, but the fact of the matter is you got to do you. You got to take care of yourself, take care of your family, pay off high interest debt, and protect your capital, protect your principal, diversify your portfolio. And if you're in a cult right now, diversify out of that cult. If you're not in a cult right now and you are diversified, keep doing what you do because you're doing it right. Good to see you too, brother. Privileged to have you in the chat, interacting, man. It's nice to have some company as always. For sure. You have a great evening too, guys. Everybody have a good one. Crypto Trend Trader, and I'm out of here.